The webinar will be long, but fear not. It will be in 3 parts. There will be the focus, which is how to use TradeMachine. Then a bit of a break. I'll go to a slideshow and show results of trades, not just back tests, but we created models and now they've existed in the real world. So how have they done? It's much more of less of a back test and more of a reckoning, right? And then there'll be Q&A, live Q&A. So I think broken up to 3 pieces should give anyone the chance to get something. And if they're tired of hearing my voice, I don't blame you. I'm tired of hearing my voice too. Okay. So before I do all of that, as you know, I have to start with disclaimers just because that's the responsible thing to do. So I'm going to go to TradeMachine right after this. It's not a slideshow, but this is not a solicitation to buy or sell any security ever. This is not advice. The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. I and Capital Market Laboratories are not qualified persons, firms, or corporations. And since we're talking about options, we got more. Trading futures and options involves risk of loss. I'm not going to read the rest of the bullet points. I hope you do and take them seriously. I'll read the last one. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such an investment in light of your financial condition. And finally, you should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. Already said that. And that's it. Okay, no more slides for now. Yay. This is TradeMachine. I think no matter how long you've been a member, whether it's 0 days, 1 day, or some of the OGs out here, 5 years, I think that you'll learn something. I say that because I went through this. It's mapped out with Alicia, our head of product, and she was helping guide me what I should be showing. And to tell you the truth, she showed me things that I didn't even remember. So I was like, okay, this is going to help. So we land on the Today tab, but I don't want to start on the Today tab. The Today tab is the amalgamation in real time of the backtest tab, the scan tab, and the alerts tab. So we can't understand the Today tab unless we understand everything else. So I will start with the backtest tab. If you don't understand the backtest tab, then nothing else in this platform is really going to make sense. So if you're feeling confused, I don't blame you. If you don't understand the backtest tab, it is confusing. So let's not make it confusing. We will start with something very simple. We will do a 3-year backtest, getting long stock in Roku and nothing else. Okay, so just remember that backtest links, right? Backtest, they're static. So these dates, if you were to share this with someone, say, hey, look at this interesting strategy. This doesn't change. So if you send this link to someone or to yourself in an alert and you come back 6 months later, it's going to be these dates. If you want to change it, you can change it by hand or you can just click the buttons at top. But backtest links are static. Okay. All right. Nobody cares about buying stock. So let's just take a look at getting long a call. All right. So this is we'll just do 30 days. This is what it looks like getting long a call every 30 days for Roku. There's no strategy here. Just buy a call. And then after 30 days, buy another call. You want to click on a backtest tile to see the details. So, okay, this at the money call, 8,000%, on a 50% win rate, what is this thing? So you click on it and it will show you the details, right? So there's a summary at the top. The stock was up 866%, 47 bucks. For those of you who are CML Pro members, that is an interesting price because that is when we got in. Then you'll see the total return, the average return, meaning the average return of every monthly call, wins and losses. And you can see all the trade details, there's 80 pages of them, and you can just download them all. Or if you click copy, you put them on your clipboard, you go to Excel, just hit paste. It's actually faster. Okay, so this is how you see the details of a backtest. Let us go to settings. This magical little gear. This is where you set your deltas. So I'm going to close this. You notice that it's doing a 60 delta, 50 delta, 40 delta, 30 delta, 20 delta backtest. So that's in the money, at the money, out of the money, further out of the money, and furthest out of the money. Click settings, and it's doing those because that's what I put. You can look at your execution fill type, which is a very fancy phrase. Tells you how you want to backtest your trades getting filled, mid-market, halfway between mid-market and the market, or a market order. We actually used to have it here, which is far more conservative, and feedback, tremendous feedback, said, no, we want the default to be mid-market, so we did it. You can set your commissions here, so your personal commission schedule. And that's that. This is where you put days to expiration. So what is days to expiration? To be clear, days to expiration has nothing to do when an option is traded. It's just the expiry, right? So this is a back test of options that are the closest to 30 days that exist. It doesn't mean anything else. So if I were to put a 1 here, I would not be trading, opening and closing a trade every day. It would just say, find the options closest to 1 day. That's probably a week. Since we're here, you can actually do up to 20 stocks at a time. Now I'm going to show you a feature which you do not have unless you're a Platinum member, and Platinum is closed, but I don't feel like copying and pasting 20 tickers. So I'm going to pull up a portfolio, and you could do this exact same thing. You would just, type in the tickers one at a time. Okay, so I'm just showing you this exact same backtest, 3 years of just buying a call blindly every 30 days in some popular stocks.
Up here, I just want to clear up some confusion here. All TradeMachine Pro members have portfolios now. They can only backtest 20 tickers at a time.
Oh, thank you. So what I just said was not true. Everybody can create a portfolio like mine. You can put the stocks in and save it. And then you can do exactly what I just did. You have a limit of 20. Platinum members have a limit of 100. But sorry, you can do this right now as a TradeMachine member. I don't know if you knew this. Clearly I didn't. If you want to, you can do this right now for any strategy at any time for unlimited number of portfolios. Create your own portfolio and save it. Okay. All right. So here's a bunch of stuff. This is how they all did. I'm not trying to show you this is a good strategy. I'm just trying to show you to use TradeMachine. Let's go back to a single ticker and actually start looking at stuff. Okay. So I'm going to go back to ticker. I'll put NVIDIA since it has a bit more history. And this is just the same kind of dumb thing. Okay. And now I say, gosh, this is a pretty boring strategy, just buying a call every 30 days. Obviously, in a stock that goes up 1,000,000%, it's actually a good idea. That doesn't really help us. What if it was a call spread? I don't know. Got about 50% win rates or less. Fuck it, what if I did call spread? So now I've used another strategy. After this loads, I'm going to show you how it's choosing those strikes. So these. Notice with this 60-40 delta, you're actually getting a win rate over 6% as opposed to what we had before with the naked calls. I don't know why she's being so finicky. I feel like we have thousands of you playing along, which is allowed, but I didn't scale up. All right, I'm gonna let this do its thing. Now, how am I getting this 60-40 delta, 50-30 delta, 40-20 delta while we're at it? What the hell is a delta? Go back to settings. The second row of deltas is the second part of a spread. This goes for any spread: strangle, straddle, put spread, call spread, risk reversal, iron condor, whatever. So 60-40, 60-40. Okay. While we're at it, okay, dude, what is a delta? Indeed, what is a delta? Click here and read what a delta is. It is the moneyness of a stock. So how much an option moves for $1 change in the stock price. Delta is not a constant. It's a function. I'll let you read about it here, but that's how you figure it out. Okay, let's go down. Never trade earnings. I'm going to click that. What is never trade earnings? Good question. I'm going to go back to calls because you guys are playing along and it's crushing TradeMachine. And while we're at it, I'm going to tell Jason that we need to scale up. Hold on 1 second as this crushes me with my patience. Okay. So what is never trade earnings and why are the returns so much better? Never trade earnings means that no matter what strategy you're doing, doesn't matter, the craziest custom strategy you've created, something we've never heard of, doesn't matter, technicals, whatever. It says 2 days before earnings, everything is shut down, the whole kit and caboodle. And it doesn't open again at the earliest until 2 days after earnings. Okay, it's a 4-day window. 2 days before earnings, close. 2 days after earnings, it allows for an open. It may not open, it depends on your technicals and other things. Okay, you can also just do only trade earnings, so the reverse. So this would this would open 2 days before earnings and close 2 days after earnings. And as you can see, as magnificently as NVIDIA has done, the stock and buying calls and call spreads, blah, 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 the best strategy, this isn't really a good strategy, it's a look-back bias, but even in look-back bias, you'd want to avoid an earnings speculation. Having said that, if you want to test companies that you want to take such a speculation, this is how you would do it. Okay. Now let's go to custom earnings, which is where many of our strategies come from. So I want you to remember these numbers, negative these, okay? Custom earnings allows you to just choose the number of days before and after earnings you trade something. So hypothetically, if I do a trade 2 days before earnings and I get out 2 days after earnings, it should be exactly what we just looked at. So let's see. And here it is. And our boxes have been upgraded. Thank you, Jason. Right? So that's all it is. But of course, our strategies tend to look at things more interesting. So if you really only wanted to trade earnings, like you wanted to be that speculator, you would really just do 1 day before earnings and 1 day after earnings. Why have a 2-day window, for example? Our strategies, of course, are something like 4 days before earnings and still closing before earnings. So it's pre-earnings momentum, for example. Right? So that's how you set those. And you can see in these very, very, very short periods of time, right? 300% just in 14 days. Let's go to open trade when. Right here is when you would set your technicals for opening. Let's do that. Go to the drop-down menu. Let's add a bunch of stuff, whether it makes sense or not. Let's start with the stock price being above the 50-day moving average. Cool, cool. Let's say the stock price, let's say something interesting. Let's say the 10-day EMA is below the stock price, which is just a fancy way of saying the stock price is above the 10-day EMA, right? And on and on and on. I don't know what this result's going to be. So here you go. You see we're getting fewer and fewer trades because those technical requirements are met less and less often. You can just click normal time to get rid of it, or you can go to technical open and start taking things out. Oh, I didn't mean to do that. You can see, by the way, what we've identified in NVIDIA. If you can get a little bit of that short-term momentum as well as being above the 50-day moving average, that's even a better signal for pre-earnings. The bull squeeze, bear squeeze, bull mammoth, and bear mammoth, these are described on the Learn tab. I will talk about the Learn tab, but not right now. Being really technical close too. Just as we had a technical open, we can also have a technical close. So we can say only when the stock's above these moving averages and close it when the stock is something else. The moving average is moving a certain way. Of course, in this strategy, we also have it closing 1 day before earnings. So there's a bunch of closing rules. So how does that work? A bunch of closing rules. Which one does TradeMachine use? TradeMachine uses OR. So let's just say if the stock price is above the 5-day EMA, I want to close. But I also have a close that says 1 day before earnings. So which one is it getting used? The one that happens first. Okay, the one that happens first. Okay, I'm going to take off my technical close. Now we come to, oh, nothing special, sorry. Now we can look at our stops and limits. If you want to stop out of a trade or hit a limit and get out, you can do so here. They don't have to be the same number. I tend to use the same number, but you can stop out at 100% gain and close at a 10% gain, whatever, or loss, pardon me. Okay? And that's what you'll see. And now you can see our results are going higher, going up, win rates are going up. And why is that? Because I properly placed stop and limit on a short-term option trade does generally, historically, yield edge. Okay. Now let's say you look at this, you're like, you know what? I've just created this whole thing. I'm not going to remember this. I'm not going to remember any of this, the thing and the stops and the limits and the, okay, you can actually just save a strategy. This is available to everyone. So I'm going to call this 14 days pre-earnings, a long call. I save it. Now I can do that strategy. Oh, it'll be here if I load a strategy. Here it is. By the way, if you want to delete a strategy, you have to select it and click delete. We've had people ask that. So that's how you delete a strategy. But I can select it and then I can come back to TradeMachine 37 days later and try this strategy on another stock. Okay. You can always load your strategy. You have unlimited strategies you can save as well. Okay. All right. I'm going to delete this strategy just to make the point. Oops. Okay. Great. Now, finally, last little bit, a custom strategy. Clicking on a custom strategy allows you to edit it if you have one loaded. If you do not have one loaded, it allows you to build one. I will build one of the ones we have from TradeMachine. I think it's called TM Special, but I have a lot. So, okay, this is our, actually, it's a good idea. I should do that one. So this is our strategy where we do a calendar spread. I'll show you what it is. Let me take the stops and limits off. You'll notice that there's only one tile. What happened to all the tiles? Well, we're not looking at multiple deltas now. We're looking at exactly this trade. Exactly this trade. This trade closes when the short-term option expires, and that's it. No more deltas to choose. All right, let's say we looked at this and we thought, I like this strategy. You can add an alert by clicking add alert, and we're now on the alerts tab. Note which alert I'm adding. This is days before earnings, 14 days. Right? If I wanted to only do this, if the stock was above the 50-day moving average, then all of a sudden, the alert would say, days before earnings with technicals, and here's the technical.
Here. Can you go over days and how that functions for days before earnings? Because that is a frequently asked question.
So TradeMachine's, unfortunately, we roped ourselves into a version of this. So this is calendar days, right? So just normal, what's 14 days before today is 2 weeks. Until we get to 3. Is it 3 or 5? I think it's 5.
Yeah, it's 6 or less.
Right.
Or less than 6. So, yeah,
right. So if it's 5 days, 4 days, 3 days, 2 days, or 1 day before earnings, we actually use trading days, right? Trading days is a fancy way of saying excluding weekends. Okay. We thought that made sense because if someone were to put 7 days before earnings, they're thinking a week before earnings. It's not a complicated thing. We also thought if someone put 5 days, we thought they were also meaning a week before earnings. So that's how it works. All right, let's go back to the alert. On the, I can add the alert, no problem. Now here's some cool stuff, which I didn't know. Here's a history of your alerts. If you click history, you can't edit this page. This just shows you every single alert you've had and when it has actually triggered, and thousands of them. Right? I mean, maybe thousands. Okay. You can also go to back to manage. If you ever wanted to bulk update your alerts, you want to change your phone number, your email address, you don't have to email support, you can just do it here. So I'm going to set my phone number to 555-555-5555. Magic. My phone number will be, there it is. I want to change my email address, do it here. Want to clear your phone number again because you're tired of getting alerts? Fine. You want to delete all your alerts? Do it here. Okay. Let's go to the Pro Scan tab and we can actually start having a conversation about option trading. So now we understand how backtests work, backtest tab. and alerts, but now we want to build our alerts, right? That we just built one, and that seemed like quite a bit of work to build a single alert. So let's talk about how to build your own personal portfolio of alerts. We'll get to the Today tab later. I'm talking about building the things that you want to trade and the tickers you want to trade. So you can choose, I will go to buy ticker after this, but we'll start by strategy. Choose a ticker group. You can do all tickers, it's fine. I'm going to do the NASDAQ 100. I'm going to do the fade the dip. We'll talk about fade the dip later and results from it. So there's a reason I'm doing this. And you can do lots of things. You can search for a ticker to see if it exists. You can sort, whatever. I'm going to choose Okta. You'll see for what reasons, but I want to show you something. People think this is a bug and it isn't. When I do Okta, you say, whoa, 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 whoa. Okta's here 4 times, different wins, different percentage. It's a bug. It's not a bug. It's different backtest lengths. 1 year, 2 year, 3 year, 5 year, right? The reason 3 year and 5 year look identical is because between years 4 and 5, this didn't happen. Why didn't it happen? Because Okta wasn't public, right? Okay. So that's why you'll see a ticker many times. It's not a bug. It's a feature. Let's go ahead and click on Okta. So I just went from a scan to the backtest tab, and I'm seeing results for something, and it's not exactly clear what it is. Like what just happened? So what is this fade the dip strategy? So we can start by reading the left-hand side. It looks like we're getting short a put spread. All right. We're going to avoid earnings. Fair. I guess there's some technical trigger. What's that technical trigger? Oh. Has to be the day that the stock crosses up through the 200-day moving average. So it was below yesterday, and it's above today. The stock also has to be above the 10-day exponential moving average, meaning there is short-term momentum, and it cannot be overbought. Aha. These are 30-day put spreads right here, right? If you look at the strategy, I kind of like the strategy, and I don't want to keep going back to the scanner to load it. I'm going to save this strategy. Fade. I never have to remember what fade the dip is again. While we're at it, if you don't want to look at the details and you don't want to go back to the scanner, you don't want to save it, all the details are actually here. Selling a 40-30 delta put spread. You open when the stock is above the 200-day moving average, when yesterday it was below the 200-day moving average. The stock is above the 10-day EMA, and RSI, 20-day RSI is lower than 70, below 70. So you can actually see it right here. These quotes right here, by the way, are real time. So you guys know. You can also see the strategy summary. This is a short put spread with a 50% limit. Oh, there's a limit? There is. The strategy closes when the put spread is at 50%. That means if you sell it at $1 and it goes to 50 cents, it's out. While we're here, just go to 3 years. This is how we can build a portfolio of alerts. Turns out, if I use the scanner, which I did, and I chose a list of companies, which I did, and I took the time to load them, which I am, I can take a look at some trades that worked. It's not just tech names. Nah, it's Coke, Visa, Procter & Gamble, Walmart, JP Morgan, Home Depot, right? Hey, look at this. Let's see if this does well over 1 year. Look at that. You say, well, are these really tradable? They might be. It says there are, in fact, some liquidity problems with 2 of these tickers, Electronic Arts and Verisign. Let's say we're willing to take that risk. An average trade return of 25% over 30 days. Yes, please. Let's add the alerts. And here we are again at the alerts tab, but notice this. All the tickers are loaded. You can add tickers to this if you want to, right now. Here. I just added the ticker high moment. The technicals are here. What are these technicals again? That's what the technicals are again. Go ahead and save them. We've now just created 12 alerts. Was it 12 alerts? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, yeah, it was. Interesting. Let's go back to the Pro Scan tab. We're not done with that guy. Let's go back. Let's try another strategy. MACD momentum, something we'll talk about today as well. This is just a straight down the middle momentum play. It doesn't require like the stock to go down, anything like that. Okay. Let's pick a company to Okta again. Same thing. We know what this strategy is. It's right in front of us. It's getting along a diagonal. So, well, it's a custom. What do you mean by diagonal? I mean this by diagonal. Right? I know that it has technicals. What are the technicals? Oh, technicals right here. Let's go to technical open. Aha. The standard RSI is below 40, so it's near oversold, possibly oversold. And these are our MACD settings. Since we're here, and this is rather complicated, why don't we do this? Let's save it. This is our MACD. And since I'm here and I thought, gosh, I would love to know how Okta did in Fade the Dip. It's a good question. Select the strategy. So my recommendation for usage is to pick your favorite strategies from the scanner and the strategies you make yourself. Go ahead and save them. And you never really have to load it. Again, you can go to the scanner to see how stocks are doing. But you have the strategy saved. So there's essentially two ways to add a bunch of alerts. You can go to the go through the Pro Scan tab like we did. Select the scan, try your tickers 20 at a time. Right. That's one way. Let's go back to Pro Scan. There's more to this tab, and it lies right here. Let's say for some reason we really love those 12 tickers. And we want to know everything that's working well. You actually can do it. Once you enter the tickers, TradeMachine will find them for you. This will not show every strategy that has worked. It's filtered by results. In other words, winning trades. Win rates greater than 50%, average returns that are positive. All of a sudden, I can see all these stocks and all the strategies that worked. While we're here, let's talk about these filters. I've got 12 stocks and various strategies. Maybe I want to sort it by the strategy type. Okay, the three inside and up, or if I reverse sort it, the 1 day after earnings drop. If the stock drops hard after earnings, should you buy a put and expect it to go lower? But where you can get really funky is where you can do it in, let's say, the number of wins. Now you're going to get a whole bunch of different strategies, or even better, average return. Like, oh, buy the dip model on Visa works great. Then we go back to Coke with MACD momentum. And again, we can actually just take out and only look at 3 years. So we don't have repeating symbols. We see EA repeating because of 5 and 3. So this is how you can just look at a particular set of symbols. The one thing we don't have here is portfolio. So you can't save this group, unfortunately. Okay. Now we understand the guts of the backtest tab, the alerts tab, and the Pro Scan tab. But wouldn't it be great if someone did this all for you? It would be great if someone did this all for you. For some traders. For some, no, it would not be great. They want a custom list, their own alerts, their own strategies. Some of them have nothing to do with TradeMachine strategies. TradeMachine is not here to sell you on a strategy. We just pre-built some that were back-tested and modeled for convenience. You don't have to use them. Do whatever you want. But for some people, perhaps who have a job, that makes what we just did nearly impossible, unless you want to commit yourself to like TradeMachine University, which some people have. Some people say, I got it. I know what backtesting is. Thanks. It doesn't require that high of an IQ. I got it, dude. Okay, thanks. I looked at the strategies. Got it. Thanks. Can you just show me what's triggering in the tickers that interest me on those strategies? It turns out yes. And this is the Today tab. So first things first, the Today tab is what you see when you log in as a member. It's that way on purpose. And again, for those that can't dedicate an hour or a day to trading or more, this is the answer. Fair question is, thanks, dude. What is the Today tab? What a good question. Turns out we have a link for that. Let's look at it. Okay, the tab shows all backtests for all stocks, all stock tickers in North America that trigger on the day, today, right? But only from 13 of the pre-built TradeMachine scans. Oh, fear. Which 13 scans? These 13 scans. I don't understand what those scans are. Me either. That's why we link to a video. You can read about any of them by just clicking the explain tab, explain link. But I don't want to be on another page. I don't want to be on another page either. I want to be on the today tab and understand what Bollinger by the dip means, or MACD momentum means, or by the sell-off means. Just click explain and you can watch the video. You can notice if you look at the strategies, let me hide this. If you look at Bollinger by the dip, by the sell-off, fade the dip, and just standard by the dip, also MACD momentum, those are there. Those other four are the sort of get long in some way when stocks drop in some pattern strategies. We're going to talk about those later. Okay. And you can also see our pre-earning stuff. It's getting pretty busy, right? Come earnings. Now, before I go further, it turns out at the top, there's a lot going on. First, you can select which group of tickers you want to see on the page. So you don't want to see tickers from stuff you can't trade maybe, or you're only interested in the Dow stocks because their options are less expensive, the volatility is lower, and you can handle the margin. Click Dow 30. I usually use the largest 500. And usually when I click it, it works. Today, however, since this is a live presentation to thousands of people, it is not working. So I shall recycle. Lovely. I shall try again. Fear is not happy. I'll tell you a story while this is loading. The worst thing that can ever happen during a live presentation is for the thing you're presenting to go down. And that is happening in real time. Let me message our CTO as you patiently await for my blunder. All right. I got verification that it's because you guys are copying me, which I appreciate. Having said that, I can't use this data tab right now. I'm hearing that it's our internet. There we go. Today tab. I'm going to go to the largest 500. And now I'm only going to see companies that are in the largest 500 companies. It's not actually the S&P 500. That index changes. We're actually every day looking at the companies with the 500 largest market caps. Okay, so that we can't call it the S&P 500 because it actually isn't. It's the companies that are the largest market caps. I told you that if you click on any of these, you can understand them. But here's something that a lot of people don't know. You can set alerts from the Today tab. You can see the alerts that I set. I want anytime something's in the largest 500, NASDAQ 100, Dow 30, I want to know Bollinger by the dip, by the sell-off, fade the dip, pre-earnings diagonal, and my long strangle, and the 14-day pre-earnings with technicals. You can set whatever you want, on, off, click, email, and you save your alerts. So this is a second place to save alerts, but it's very specific for the Today tab. We do this because for those that want, you actually never have to go anywhere other than the Today tab. But you better understand what you're seeing. And that's why I started with everything else. Okay. Now, how does something show up here? Okay, it's a good question. For a back test to qualify for a trigger, it must show a win rate above 50% for both 1 year and 3-year time periods, at least 2 wins total over 3 years, And there are also requirements for percent gain, which vary by scan type. But at a minimum, it's a 15% return over 1 year. Let's talk about the nuts and bolts before we get into trading. When do I do this? Okay, I see this, I like it, I want to do it. Now what? All right, I shared Fade the Dip in community today. How? What? Okay. All strategies in TradeMachine, all triggers, open, close, all of it happens 15 minutes before the close. Okay. But in order to have people prepared to do their trades, we send alerts in real time, starting 1 hour after the market opens. We don't send it right when the market opens because that would be bedlam. Right? So you may get an alert an hour, 12 minutes after the market opens, but TradeMachine won't enter or not enter until 15 minutes before the close. I have no data to suggest that 15 minutes before the close is better or worse than 1 hour and 12 minutes after the open. I have no data. I can't tell you one way or the other. What I can tell you is that if we're going to present a back tester, it can't say, gosh, I don't know, it just opened whenever. No, it's got to be exact. So when is exact? Exactly when there's the most liquidity in the option market, which is 15 minutes before the close. Okay. Turns out there's more. Notable technical breakouts. Notable technical breakouts are things that are happening. They're not related to options, it's related to stock. It's when stocks are doing certain things, which have not been modeled, but which I looked at and I saw that there's a possibility of some edge. Some people would say that it leaned toward it, but p-values weren't 95%, 99%, maybe they're 92%. And so if you're looking for ideas and you want to build on them, you can go here. All right, let's say you say, hey, BABA's oversold. What happens if I click it? This is a stock backtest, right? Everything on the notable technical breakouts is a stock backtest. You say, what happens when Alibaba gets mashed like it is now? Well, what am I looking at? Technical open. Oh, it's when the RSI is below 30. So classic oversold. Well, okay. What if I don't know. What if I got long call spread for 30 days? Aha. So this is something that looks interesting. Wasn't necessarily a scan, but there are vastly more possibilities on the Today tab than just the ones up here. You don't need to use them. Just know that they're there. Last thing, before we get into the more interesting stuff, we will go to the Learn tab. So we've done Today tab, Backtest tab, Pro Scan tab, Alerts tab, and Learn tab. Let's say you say, yep, you know, Ophir was talking about that Fade the Dip thing. I don't really remember how we got there. There was some scanner thingamajiggy. Yeah. So you can just type in Fade the Dip. And there it is. Okay. Or he said that thing about Delta, what was that thing? Delta. Okay. So you can use the Learn tab to look for things. We will be building out the Learn tab in the near future, and we have been building it out recently. We just don't tell you. Last thing before I go to the slideshow, say, dude, what about the Create tab? That's a good question, but you can see what it's all about by clicking Watch. What is this Create page? We actually did a full webinar on this tab alone, so I'm not going to cover it again. And if you're a TradeMachine member, you may never need it. Depends on how you like to trade, but it's up to you. This is where you would start to create technicals and look on charts. People like to read charts for themselves, build their own stuff. If you want to build your own technical strategy, step by step, see if it's worth it, instantaneously have computations. This is sort of virtual edge, right? This is the Create tab. It's too long to go over in this webinar, but you can always learn about it if you go there, or, oh, I think this is actually missing on the Create tab, on the Learn tab. Oh, it's right there. No, it is. Okay, so that's our bad. In order to learn about the Create tab, you actually have to go to the Create tab and click this. We should have that in the Learn tab, but that's our bad. Okay, these are the nuts and bolts of TradeMachine. So now I've shown you the nuts and bolts of TradeMachine. I've basically given you an entire webinar on how to use it. I haven't really given you a lot on why to use it. So how? Thanks. Why? I think that's a fair question. In fact, it may be the most important question. I didn't start with that because I promised that I wanted to do a user's manual, essentially, webinar first, and we've done that. There will be live Q&A. This is the end of section 1 of the webinar. And here we go to section 2. For those of you who saw me on a webinar recently, some of this will be familiar, not all of it, because some of it is brand new and has never been seen by anyone. I'm going to continue from the disclaimers and not repeat them. Please remember that the disclaimers hold for this entire conversation that we are having together. The point of this webinar is pretty clear. I don't want to talk about it. What makes a successful trader, in my opinion, why TradeMachine matters. So I've said this now on 2 webinars. So this is going to be the very, very, very short version. If you're really looking to be an option trader, I'm talking about someone who can consider option trading a source of income, whether that's full-time or part-time, not kind of hit and miss, like, oh, trade, cool. Then so I was a market maker. So as a market maker, this would be a little different, but as a customer, we're customers now, right? We're market takers, right? You probably should have 8 to 10 months of profitability a year. This is every year for decades. If you're a market maker, it should be 10 or 11 months. The down months should be well contained. So your worst month shouldn't be worse than, let's say, your third best month. Right? There's no bad month that wipes out the year. That should not be happening. And if it is, it's okay. Learn from it. You're not doing risk right. This is why it's going to matter because of what we're going to look at next. Right? So it's a comfort or expertise in more than one trade type. You guys know how I feel about naked call buying and naked put selling or put buying. Sometimes it's okay, but that in and of itself, I've never seen someone be successful by the definition I have above. If you can only buy a call, only buy a put, only sell a call, or only sell a put on their own, I've never seen anyone actually make money doing it. I've seen someone make money on a trade, but I'm talking about, I've never seen someone, do it for 12 years and make a couple million a year consistently, whatever. So that's true because option trading is volatility trading, right? So if you're doing a naked option, you're not just trading on direction, you're trading on volatility. And unless you know how to trade volatility, then you probably don't want to do that. And of course, the only way to hedge an option is with another option. So there's an apparatus to do such a thing. Right? To try to aspire to this successful trader definition. And that's what I'm going to talk about. All right. My spiel about effort, I'm not going to go over it. But it does mean a basket of different trade types. Okay. So for some of you who just saw my simpler webinar, you will have seen the next 10 slides, and then I'm going to go to new strategies. Maybe not 10 slides, maybe it's 20 slides, doesn't matter. Right. So what is TradeMachine? You guys know. It's a backtester, a strategy scanner, an alert system. It's got several pre-built strategies. Obviously, the daily trade generators, the trade tab, it's anything you want, right? So let's look at some stuff. So I want to talk about the get long in some way when stocks drop in some pattern strategies. We have 4 of them. And these are the 4. I didn't name them very well, to tell you the truth. I don't know if you guys can see this, but it's in my way. So. And I can do nothing about it. Excellent. Buy the dip Bollinger, buy the dip technical, buy the sell off, fade the dip. So there's 4 versions of this. All 4 are on the Today tab. And you say, gosh, Ophir, why are all 4 on the Today tab? I will show you why all 4 are on the Today tab. Let's start with buy the dip Bollinger. This is what it looks like in TradeMachine, which is very difficult to understand. It's when the RSI is below 30. Okay, so oversold. And the day that the stock price crosses down through the lower band. What does that mean in English? Oh, and what do I do when that happens? I get long a 60-day, 30-day diagonal. Okay, so what does that look like for real? So this is Tesla in 2020. You can see that, trust me, the RSI was below 30 here. It broke through the lower band of the Bollinger. The stock still went down for a couple of days or whatever. And then it got out here. That's what the backtest is. Let's talk about the results real quick. And now this is, I wanted to be clear. I wasn't clear in community. It's my fault. Almost always my fault. I don't want to show you a back test per se. The model has been built. We wait for a year or more to pass, and then we measure the results. These are the results. When I first introduced these models to you, we only have the past. They haven't existed yet. I have to say, hey, here's what I did in the past. And we take a speculation if we like it or not. Then time moves forward and we review ourselves. So this is what has actually happened. Okay. A lot of data here. I'll get through it. This is by the dip Bollinger. This is the NASDAQ 100, the Dow 30, the S&P 500 over the last 6 months, 1 year, 2 years, and 3 years. Over the 6 months and 1 year, this is all essentially production. So it's been going, it's existed and the alerts were going out. This was introduced in June 2020. We are in July of 2021. So let's say 6 months and 1 year are kind of the real world. You can see the extraordinarily high average returns, higher in the NASDAQ than in the Dow, but the Dow has higher win rates. And of course, more trades in the S&P 500. I would take some of this with a grain of salt because it happens very infrequently. So I don't know if we're looking at 4 and 4, 3 and 1. Just look at the 500. I made a mistake here. It says S&P 500. Pardon me. It's the largest 500, not the S&P 500. Then we have another version of this, right? We'll do it side by side called fade the dip. So one says we'll buy a call diagonal. We'll use an option to hedge another option, but we'll own premium. And here's another one, different setup. I'll show it to you in the chart. And we're going to sell premium. We're still using an option to sell another option. It looks like this. The stock has to cross up through the 200-day moving average. So that day, right here, this is the 200-day moving average. The stock popped up above it. It's already above the 10-day exponential moving average. Trigger, boom, 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 close. Notice the stock didn't really go up that much, but that's not what the strategy is about, right? Fading the dip is something you do when you think the stock's not going to go down very much or at all, rather than, oh, it's going to recover. By the way, this is how Amazon has looked over the last 5 years. Didn't fade the dip. This is a chart of Amazon, sorry. All right, let's do the side by side. This is fade the dip. I'm not going to go over it. I'm going to do them side by side. So this is Bollinger and fade the dip. See, the average returns here are lower. The win rates are substantially higher. But what else do you notice? Far more trades, right? In the last 6 months, in the NASDAQ 100, this only happened 17 times. It's happened 51 times with fade the dip. Different triggers. And the Dow 4 times, which is hardly worth reporting, 19 times. Okay. So here's 2 different versions. Right? One sells a put spread. One buys a call diagonal. Both use options to hedge options. One sells premium. One receives premium. One happens less frequently. One happens more frequently. One has higher average returns. One has higher average win rates. And we have 4 of these. So we talked about this one, buy the dip, been around since June 2020. Oh, fade the dip's been around since December 2019. Sorry. So that's 1.5 years. So we can start to look at this as real life, right? You know, if we had a 1.5 year thing, right? We have the actual original buy the dip that's been around for over 2 years now, and buy the sell off, which uses a very what we call the CML over sold trigger. So RSI dipping below 25. Okay. So these are the 2 we talked about. So rather than go through every single strategy, each one, and compare them, I'm going to just put it together and show you the results of get long in some way when stocks drop in some pattern strategy. And why would I do such a thing? I will answer that after I show you the results. This is all 4 of those together. Remember, at least the last year is real, right? It's been introduced. For some of them, 1.5 years and even 2 years has been real. So it depends what you want to look at. But the strategy has been introduced. Start the clock. This is what has actually happened as opposed to what hypothetically could have happened when we introduced it. For those of you that want to go back to the review videos when we first introduced it to see how accurate this was or how similar this was, you'll see a remarkable similarity. Interesting. Who would have thought such a thing? Having said all of that, I've actually pulled the wool over your eyes. I've shown you average returns and win rates, but I haven't shown you relative to anything else. None of this matters unless going through all of this rigmarole is better than the baseline. Right? Why would you have a trigger if just buying a call every 30 days works better? Why have technicals? So here's the baseline with no technicals versus the strategies. I'm just going to do fade the dip and baseline. Okay. So fade the dip 39% over a year. This is in production. This is without technicals. Win rates 89% versus 77%. If you prefer the Dow 30, again, right? So these strategies, trust me, I've looked, these strategies outperform the baseline in a statistically significant way, as they did when I introduced them, and I introduced them in a video with the exact same computations. Do you remember when I said this? What makes a successful trader? And I said a whole bunch of stuff, blah, 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 blah. That's what I said. Comfort or expertise in more than one trade type. Naked call buying, naked put buying, selling. Not really, all the time at least. And we want to be successful with multiple trade types in any environment. So we have the results of get long in some way when stocks drop in some pattern strategies, right? We had a long call diagonal. We had a long call. That was by the dip. It's just straight up long call. I'm not saying it doesn't belong. I'm just saying that it can't be all of it. We had a short put spread. And that's one strategy. One strategy, one version of the world where we're buying options to sell options, spreading them, different triggers, all the same idea. So I'll make it even narrower. In order to reach that successful trader aspiration, in my opinion, we want to have a comfort or expertise in more than one type of trade. And that means you have to let go the naked call buying as only way to trade. Not let go naked call buying altogether. Buy the dip, the original buy the dip, is buying a 2-week call. Plain vanilla. There's some stops and limits and technicals, blah, blah, blah. It's buying a call. Okay. It's not good enough. I'm here to tell you it's not good enough. And I'm here to tell you it's not good enough, even if you don't want to hear it. And even if you cancel TradeMachine because I tell you it's not good enough. I would rather you not lose money than you subscribe to TradeMachine. If you join TradeMachine and all you want to do is buy calls, finish this webinar, it's helpful, then cancel. You cannot make money in the long run only buying calls. You can't make money in the long run only buying calls. You cannot make money in the long run only buying calls. We have other strategies, not just stock went down and do something because you think it'll go up, like pre-earnings momentum and technical momentum. Pre-earnings momentum looks like this. Some sort of optimism ahead of earnings. Earnings is here. Get out before. Get in about 14 days before, 7 days before. You can buy a call or a call diagonal. Two types of trades for the same phenomenon. Again, one of them uses an option to hedge another option. One of them just gets naked long call. So here we go. For those of you who are wondering why 14 days pre-earnings has not been working, this is the diagonal and the call. You are not crazy. The last year has sucked. It sucked. It's basically a push, and with commissions, it's worse than a push. Win rates, poop. Long call, same thing. You'll notice the win rates are lower, but the average returns are larger. That makes sense. Now, we introduced this a long time ago, so we get to take credit for all of the good stuff. Remember, these are very, very short trades. So, this is a 1-week trade if it's diagonal. It closes in 7 days. So 14% in 7 days is exceptionally good. But yeah, I mean, if you're wondering what's been happening to your trading doing these, yeah, it sucked. You're up, you're down. You're up, you're down. It's happening to me too. But I don't do just this trade. But these I've been paying commissions for these trades. My account hasn't changed. I'm donating commissions. But I've been paying the bills because I have a basket of trades like MACD momentum. Here are the results. This is a straight down the middle momentum play. Win rates, about 50%. Returns, rather large. This is a 30-day trade. Okay. So if you wanted to compare it to the pre-earnings momentum, maybe you would multiply the pre-earnings momentum ones by, say, 2 and a little. Okay. So in total, we have a 60-day, 30-day long call diagonal. That's by the sell-off. That's the Bollinger by the dip, and that's MACD momentum. Aha, buying an option, sell an option. For a 14-day and 7 days, we have long calls and diagonals. Oh, sorry, the 14-day 7-day long call diagonal. We use that 14 days pre-earnings momentum. And we also do a long call for 14 days pre-earnings momentum if we don't want to do diagonal and buy the dip. And we also have a short put spread in fade the dip. Some people would say that the only person that would do such a thing has a comfort or expertise in more than one type of trade. They might even say that the person who does this believes that naked call buying and put buying is not a strategy that they've ever seen be successful, as per the definition that I introduced. In fact, some people might even say that, you know what, I think the only way to hedge an option is with another option. And they might even say, when we do that, we create an apparatus that allows us to be successful with multiple trade types in any environment at any time. This webinar felt like I was going to tell you how to use TradeMachine. I did. This webinar felt like I was going to review some of our models. I did. But what this webinar did is showed you an apparatus that allows you to be successful with multiple trade types in any environment at any time. If there's one thing we can say about the last few years, we've seen all of it. The fastest bear market ever, the fastest recovery to bull market ever, the worst December in the history of financial markets, December 2018, worse than the Great Depression. There is no better encapsulation of 3 years of anything can happen in the stock market than what we have just had, and everything I showed you included all of it. All of it. So, TradeMachine is that apparatus, in my opinion. This is why we made it. Not to show you one strategy, not to grab your money because you like to buy calls. And I'll show you stuff where calls work. Remember that first back test I did with Roku? Yeah, just buy calls. Yeah, of course. Find a stock that's up 1,000%, and I agree. Just keep buying calls every 30 days. That's not real life. Real life isn't that easy. Real life is even when it's good, you have 2 down months in a year. 2 down months, not 2 down days or 2 down weeks, 2 down months. And that's a really good year. Last year was the first time in a long time I had 10 up months. And I make a lot of money trading options. Doesn't matter. It's not a contest. But last year was the first time in a long time that I had 10 months. And I've been on the 8-9 thing for a while, actually. For those of you who don't have TradeMachine, you can try it. It's trademachine.com. Thank you. Now I have finished the second part of the webinar. Remember I said it was in 3 parts. The third part is live Q&A. So for those of you who are not TradeMachine members, the first month is refundable. I just don't understand why you wouldn't try, like just paper trade. I'm speaking to thousands of TradeMachine members, so I'm not going to do that. Let's do the Q&A. Mademoiselle, would you mind presenting me with questions?
Yeah, does my mic sound okay? I got some notes that it wasn't great earlier.
It was pretty poopy, and now it's a lot better.
And now it's what?
Better.
Better, okay. All right.
Before we start, I just want to say, this is pretty remarkable. I did that whole thing. I wanted it to be an hour, and I did it in an hour and 1 minute. I know nobody cares about stuff like that, but I actually care. And so just, that's all I want to say. Go ahead.
Okay.
I love it.
Couple of early. Okay. I have trouble holding options positions to let the signal play out to capture the best each opportunity has to offer. Do you have any thoughts on helping with this other than saying, let the signals play out and follow the closing rules?
So I don't think anyone should buy a stock or speculate on options without a plan. You guys know I had that option speculation webinar, right? Where I was really explicit. I showed you what a plan looked like, right? Months. One was 8 months. There should be no guessing. Once a trade is entered, there should be no guessing about when you're going to get out. Right? Certain things can change it. Stock does this, options do this, blah, blah, but you should know. So if you're getting into a trade and having trouble deciding when to get out, you're not getting in right. There is always a plan, follow the plan, because if you don't follow the plan, unfortunately, we start making decisions based on emotion, and the market has a name for that. It says, give me your money. So if you're going to use TradeMachine, follow the plan. And as you know, even though it's easy to say, friend, it is not easy to do. But that's the answer.
Okay, I don't think I'm very good at balancing delta risk. Could you briefly discuss your approach? Let's say when you have 3 pre-earnings diagonals working, how or when do you add trades of opposing delta and how you go about selecting those?
Yes, so it's a very, very good question. Something that I think you guys should all know. I know this is going to sound obvious, but when I'm going to say it sounds obvious, and then when I translate it into options, it all of a sudden it says, oh, that's true. The market goes up 4 out of 5 years in total. This is since, I think, World War II. The average up year is actually larger than the average down year. I know everyone doesn't, if you read CNBC, you think that's not true. It is. The average up year is larger than the average down year. The average up year is larger than the average up year. The average up year is better than the average down year. Like up, larger than down, up 4 times as often as down. That creates an apparatus which generally goes up. And therefore, finding a bearish strategy is virtually impossible across market cycles. Virtually impossible. So how do you balance delta risk? Do you say for every long trade, you also have one that's short deltas? No, why would you do that? This apparatus is up more than it's down, 4 to 1, and the up years are better than the down years. So why would you have a bearish strategy for every bullish strategy? Maybe you have a bearish strategy for 5 bullish strategies. How do you manage deltas? I'm going to answer the question a little differently. You don't actually manage your deltas with options, you manage time. If you're doing a 14-day, 7-day pre-earnings diagonal, then everything's very, very short term, right? If Apple, Microsoft, and Google shit the bed, everything, I said shit the bed, and Google tried to answer me. That is so interesting. Then everything would have been bad. So how do you exist in that? So what you want to do is hedge your duration, to use a bond term. It's not actually duration. I'm using the word as in English, not as in the duration for a bond is the amount of bond price changes for every 1% change in interest. I'm not talking about that. But hedge your duration. If you have a 60-day, 30-day diagonal, is it so bad if the stock goes down for a little while? It wouldn't be so bad, actually. Right? So that's how you hedge it. You only have only so many certain kinds of trades at the same time without other things hedged. So that's the answer. You can, of course, try to couple trades. So you say, I have 4 or 5 pre-earnings plays on. I like all of them. How do I hedge it? You can do things like the bearish burst, or my favorite, as you guys know, is the long strangle technical. It's infrequent, unfortunately, but it's a cool trade. But I would hedge duration, not necessarily deltas.
Okay. Can OG go over the QA long short straddle 2 custom back test?
Yes, the QA, which one?
Long short straddle 2.
Oh, yeah, that's super hard. Okay, so I'm going to pull it up from the scanner. It's a pre-earnings thing. I think it's called the scalp, 6-day vol scalp. Posted. No?
Yeah, I think you're right.
Okay, so I want to pull up the strategy. Okay, so this strategy was actually inspired by a guy who runs steady options. When I was building, when we were building TradeMachine, I was looking for some cool ideas, and he said, you should try this, just see if it works. So, okay, what's the point here? So this is pretty complicated, so I'm gonna go slowly. First of all, I want to note that it's a custom earnings strategy. It opens 6 days before earnings and closes 1 day before earnings. Why 6 days and not 7 days? I really don't know why I did that. But now I have to stick with it because we have, we have 197,000 alerts set for this. I can't change it. So some things I did earlier, it was definitely back tested. Don't get me wrong, but I don't think 6 days and 7 days made a difference. I wouldn't have included the strategy if it did. It's okay. Just forget it. That's what I did. I think I know why. Yeah, here, I'm going to show you why. If you go now, okay, so 6 days before earnings get in, 1 day before earnings get out. Fine. Well, what is in and out? Indeed. So we want to sell an at the money straddle. We're selling at the money straddle. Hello, right? And we want to get long the 30-day at the money straddle. So this straddle is covered, right? The short straddle is covered. The play here is a scalp. We want to see the volatility get crunched pre-earnings, which is a pretty difficult play because there is a theta paradigm that will protect that vega. But we're willing to take that little bit of scalp by protecting it with a 30-day. So this is strictly speaking, people say, oh, option trading is volatility trading, be a volatility trader. This is a volatility trade. This is a volatility trade. So that's the point. The point is to see, remember that the 30-day options have the 7-day options and they have 23 more days of options, right? It's the exact, they include the 7-day and they have 23 more days, right? 7 plus 23 is 30. So this trade tries to take advantage of that.
Okay. When making a buying decision, how reliable is signal strength on the Create tab if you have a high efficiency score?
I would backtest after I've created something. Okay, so let's say I did something here. I was like, oh, I want to see with Apple, I don't know, it breaks out to the upside. And also, yeah, all right, click that. I don't remember how to use up the creative. And then also like when the stock is above the 10-day EMA, I'm just guessing what could work. I don't know if this is gonna work. Let's do the 50-day. Okay, so we can see that actually the efficiency score sucks on these. Let's just pretend it was good. We'll make believe. Okay, what I would do if I like something, I would choose the amount of the period. Let's say I liked it after 22 trading days, which is 1 month. So I would test the trigger, click test trigger. It'd go to the back test tab. This is Apple. This is going to be 30 days. 30 days is 22 trading days, right? And then I would go ahead and say, okay, well, what if I don't know, maybe I did a diagonal. I'll just do a call spread for now. Right. So that's what I would do. I would take a look at that efficiency score. Well, there you go. Right. Let's ignore earnings. Let's avoid earnings. There you go. I just don't get too excited. I just found a call spread that works, but it took the technical open from the Create tab and just put it in here. And it's basically saying when the stock gets through that 2 standard deviation Bollinger and it's already above 50-day moving average, that tends to lead to something bullish in the next 30 days. That's how I would do it. I'd mess around on the Create tab is great for messing around, right? Just try this, try this, try this. You get all these computations here. Like it's crazy, all the computations we do for us. Eventually you do have to go to the backtest tab. I go to the backtest tab and I make sure. And let's say I like this, I would save this strategy, give it some name that I can remember, and then I'd set the alert. But that's how I would do it.
Okay, I noticed some alerts like VRSK for X days pre-earnings need to buy 7 days to expiration 40 delta calls, but only monthly options are available, which are 30 days or so till expiration. Why?
Yeah, so the strategy is set in stone, and then we test it against everything. If this is the case, then it turns out that this does quite well, even using the 30-day options. There are no 7-day options for VRSK, I guess. Yeah, right. I can see that. Let's go to the present. I can see that because it's triggered on May 3rd. It's buying the May 21st calls, right? So that's not a weekly option. That's at that time an 18-day option. So VRSK doesn't have weeklies, and so TradeMachine has to find an option that exists. We don't make up options, and we take the option that's closest to 7 days. And in these cases, it's the next expiration. Sometimes it's 18 days. In this case, this was opened on July 29th. This was August 20th. So that's a 22-day option. So That's the answer. It didn't exist, so we use the thing that's closest. TradeMachine does use the options that are closest. It always does that.
Yeah, so just to clarify, TradeMachine is like, it's kind of like a robot brain, if you want to think about it that way. It's going to select the option, from the available options, those that are closest to the settings that are used in your back test. So if an open triggers, it's going to try to find options that meet that. And so just to clarify a little bit further what that means, how it selects options is number one, it looks at the distance from expiration and it chooses the options that are closest to those days of to expiration. Sorry, stuttering a little. Then second, it looks at the distance from the desired delta. So it's looks at the closest to days of expiration, then the closest to the delta settings. And let's just say this weird, never going to happen coincidence happens and they're both equal distance. TradeMachine is going to select the earlier expiration. So that's how that works. Just wanted to clarify that. Okay, you frequently say do not pick up pennies in front of freight trains for put credit spreads, PCS. Do you have a rule of thumbs for risk reward ratio on these kind of spreads that you follow? Thanks for all you do.
Yeah, so I mean, virtually never worse than 1 to 5. And even if I'm doing that, I better be way out of the money, and I think it's free money or something. So if it's a $5 wide put spread, I better be getting at least $1.
In the settings, is there a way to change default deltas for the various option strategies individually, or once you change it for one, then you change it for all? For example, let's say I want a 40 and 20 delta for a straddle and a 30 delta for a strangle, or a 30-10 delta for a strangle, sorry. No, so actually we had a fun discussion about this on the community earlier. We're using local storage for that. So it's going to use the last settings that you used. And if you open a backtest that's using different deltas, it does update your delta settings. So we're talking about some usability improvements, and we might be able to create kind of what you're talking about in this question. So it's on our radar to make that a little bit more user-friendly.
The only way you can do that is if you happen to go for a custom strategy each time. I don't think it's a good idea, but if you have something set in stone, you could create, if you created a custom strategy of a 30 delta straddle and you always use the custom strategy, that will never change. But in the settings, no, unfortunately, no.
Okay. Can you do a Bollinger indicator example?
Yeah, I mean, we have our Bollinger by the dip. That's the best one I got.
I think this was earlier in the webinar. I think they're just saying, like, can you show how to customize that? But yeah, you can do that by opening one of these.
Okay. So here's Tesla on the by the Bollinger dip. I'm waiting for the stock to be oversold. Fine. And then I want the Bollinger Band, the stock to cross down through the lower part of the Bollinger Band. So it happened most recently, most recently here, just right. That was the example I showed you. So that's it. If you want to, you can, there are a lot of things moving around in the Bollinger Band. You can do a 3 standard deviation Bollinger. That's a very wide one. You can do 1.5 or 1. 2 standard deviations is kind of normal, whatever normal means. 20-day SMA is kind of normal. If you wanted to get cuckoo, you could start changing it, but just don't change it. Just don't change every 1 degree, right? And then see if it's a better back test. It's not really what back testing is. This has been checked over thousands of back tests in sample, out of universe, right? So there's reasons there are certain settings, but yeah, that's how you do it. Just do that.
How are these gains calculated? Sometimes bid and ask spread so much that these numbers could be misleading.
Yeah, I agree with that. It's not that it's misleading. It just couldn't be accurate. Not as accurate as like, yeah. So you want to look at options or companies where their options are pretty tight. And you can determine that yourself. One way to do it is say, let's close this and I'll start something fresh, show you like what's the impact. So Melly, No, let's do something that has more trades. Let me look at something that has more trades. Sorry. Here, faded it. Okay. Let's do something that has a lot of trades. Okay, so Pepsi. Like, are Pepsi options liquid? So liquidity means width and depth. For most of you, I don't think depth will matter. I don't think you're trading through the market maker size, but width does matter. So, okay, this is mid-market. Just remember 91.6% return, 12 wins, 1 loss. It's saying, hey, there could be a problem here. So what if I go from mid-market to halfway between mid and market? It's a little worse. So 12.1, 91.6. 10.3, 4.9. It's a good way to look at something and say, yeah, I don't think so. Unless you're, willing to get that mid-market. You can also say, options tend to get tighter, more liquid as we get moved further in time. There's more option traders. So you can say, okay, well, how about the last year? 209.6. What if I go back to mid-market? Pepsi is probably not liquid enough to trade. Or it is, you just have to do it, put the market in it, put the order in at market, at mid-market, my goodness. Put a limit order in at mid-market and don't stretch. It's a good way to test realistic liquidity.
Can the trigger a day be shown on ProScan? I wanted to go over this one because I think there's still some confusion about the difference between ProScan and Today Tab. So
okay.
Maybe.
I didn't actually understand the question. Can you repeat the question?
Can the trigger day be shown on ProScan? So I think this is a question we get sometimes is like, can you just show me when this is going to trigger next? For ProScan, some of these, we're not going to know until it triggers. This is why we built alerts. The ones that are based on days before earnings, I guess we could show that. What 7 days before earnings, so list that date, but
well, only if earnings are verified stuff.
Yeah, it's a lot of information. It's picking and choosing what information you can show.
We do have the next earnings date. Right?
Yeah.
Yeah. But the scanner.
But the short answer is no.
The scanner is designed to help populate your alerts. So when it does become actionable, you become aware. It is not actionable now. The scan tab ProScan is not actionable now. Something could be, but that would be totally random and very sort of weird luck.
Yeah, that's what the Today tab is for.
That's what the Today tab is for. That's right. Or alerts. And the Today tab, remember, the Today tab is just the backtest tab, ProScan tab, and alerts tab in one. This is a backtest, right? It qualifies because of the scanner, strategy we use in the scanner, and it's happening today, so you're getting alerted, right? The Today tab is the backtest tab, ProScan tab, and alerts.
Any alert for sell-off, pullback, or bearish trades?
Yeah, we have a bearish burst. You can see it here. Like I said, it's virtually impossible to have a winning bearish trade. It's something I want to try. I'll just try it in real time. Just out of curiosity. It's current NASDAQ 100. Access to pop stocks. I'll try something. Thank you. Why is that not coming up? Okay. I'm just curious. Let's say what happens if an RSI screaming. Oh, that's quite further. Yeah, look how hard it is. I'm just buying a put. Oh, I'm shorting. Haha. I'm buying a put spread if the RSI goes above whatever I said, 80 or whatever. And even that is hard. So finding a bearish strategy that works in all markets, by all markets, I mean timeframes, is virtually impossible. It's because of this fabulous thing that we have, the stock market. Okay, so this is pretty good long-term. But it's this fabulous thing we have, the stock market, that we get to make wealth in by just plopping our money down and shutting our face, right? Just shut up and just take the money, right? For long-term investing. So because of that, it's very difficult to find something that works against that apparatus. And so you will find things like that very hard. Just out of curiosity, I'm going to try one more thing. it never happens.
Well, you could try 2007, 2009.
No, it definitely wouldn't have happened then. That's because they are. So it doesn't matter, guys. I'm just building. This is, if you're wondering how I build triggers, this is how I do it. Go ahead. We can keep going.
Yeah. Just to clarify, the ticker universe is U.S. exchanges only. I think you might have got there eventually, but.
Okay.
Okay. So say I want to trade Okta tomorrow. How do I identify what the best strategy to trade that particular stock is for July 28th?
There may be no good strategy. So you go to ProScan, you go to buy ticker, you type in Okta, you say, okay, what's been working in this ticker? And you get a whole list, right? But these aren't triggered yet. So there is no magical trade tomorrow for a stock. That's not how trading works. Trading is patience, setup, plan, and abiding by the plan. You cannot manifest a trade.
I am a newbie to advanced options. Welcome.
Welcome.
Started using the Today tab recently. I was wondering, is it possible to add examples where I know exactly what to buy from the option chain? Fade the dip will tell me to buy 40 delta and sell 30 delta, but not exactly which option to buy or sell.
Yeah, it would actually tell you to sell 40 delta, buy 30 delta. But no, we don't have that right now. We are considering adding 15-minute delayed option pricing in a montage, but that could trigger opera fees, option pricing, or blah, blah, blah authority. So for right now, no, you want to go to your brokerage, be like, okay, what's 40 delta? What's 30 delta? 30 days out.
Yeah, and every major brokerage is going to have the option chain data. So they're going to have the delta listed.
Yeah, we are considering, of the many things we're considering, is kind of having that, essentially having an options tab, something like that. So you click it, we go, but that's, don't hold your breath. We don't. I'm just saying it's one of the things that we're considering. We've considered things for like 6 years and not done them. So just. Yeah.
Well, we're working on it, but we'll see.
Yeah.
Why do a handful of tickers work for a certain strategy, but others from S&P 500, Russell 2000 don't, even from the same sector or industry?
Patterns are a mystery. Nothing that's in the scanner should only work for a certain group. It should work for all groups. By all groups, I mean 500 largest and smaller. Just 500 is the largest and then smaller groupings, not all tickers. But yeah, it's kind of the mystery of the market. It's a reasonable question. I don't have a good answer.
This is a good suggestion to mention the comma or no comma after a ticker on the backtest tab. So when you're doing a single ticker backtest, you can run that backtest against multiple deltas if you're not doing a custom strategy. Do you want to walk through an example, like just long call or something? So with no comma, because you're doing a single ticker, you can run up to 5 deltas for a single ticker at one time.
Yeah, and those deltas will be the ones in the settings.
Right. Now, if you put a comma, it's going to do your main.
It's highlighted in blue. Yep.
Yeah.
It'll do the 40 delta. So,
and that's what's used for multi-ticker.
Yep. So if you wanted to not do 40 delta, but you wanted to check a bunch of companies on this, where you're like, no, not 40 delta. I don't care about 40 delta. I care about 50 delta. Then you would go here and you would change this to 50. In other words, at the money, and then run it again.
A good little tidbit. Ophir, you mentioned have a good basket of strategy types. Does that mean have a good mix of strategies that can trigger as market changes, or trade multiple types of strategies at a given time rather than focusing on one?
I don't understand the difference between the two things you presented, actually.
I think they're asking, is it, when you refer to this, does this mean that you've mastered a good mix of strategies so that you can apply them in different market conditions, or if at one time you're trading multiple types of strategies?
Oh, yes. So both. Now again, you can't manifest a trade. So maybe you would love to be trading a diagonal or selling a put spread, but you don't have a good trigger for it. Well, you can't manifest it, then it's not up. So you definitely have to risk manage having too many positions that are identical, right? If you have 37 14-day, 7-day pre-earnings diagonals, then I hope you have like 100 other trades, because I mean, like that you have to have something. So what happens to me then, sometimes you'll notice like we get tough markets. It's hard to find signals, which is good. That's in many ways, TradeMachine's working very well when you come to the today tab and there's like one thing. It's like, hey, nothing looks good to trade right now. But there will be times where I'll limit. We each have our own limit. Right? Some people say, I'll never have more than 5 pre-earnings diagonals with nothing else to kind of sway it in some other way, even if it's bullish. Some people do 20, some people won't do more than 2. It's very personal, but you have to, I would say at one time, you probably don't want more than maybe 30% of your trades to be bungled by 2 bad days in the market. Like that's just, it can't be. And when you have these longer diagonals or put spreads, 2 days ain't going to do it. Right? You're going to have 2 bad days, whatever bad means. And it's just bad days. It hasn't killed anything. With our pre-earnings trades, dude, 2 bad days and you're out. Right? So don't let a day or 2 destroy your month, and definitely don't let a day or 2 ruin your year.
Hi. If we start going down based on seasonality, is there a win rate?
So you can't actually test seasonality other than manually. So I don't even know what I have loaded here, but you could do this thing, right? Where you're like, okay, every 3 months, let's say we wanted to do seasonality. So let's do starting September 1, well, after Labor Day. Well, let's say after the quarter. Okay, September 30th, 2019, because 2019 was kind of normal, to December 31, right? So you could manually test the seasonality. I don't even know what I'm testing here, but you can do that. Then you go quarter by quarter. You can't do this across 5 years without changing the year. So there's a way to like brute force it, but there is no cool button that says just Q3, right?
This would apply to Q3 as we are on our way. Oh, yeah, you just answered that. Sorry. All right. Ophir,
Yes.
What is your process when TradeMachine triggers an alert, but the stock has moved significantly, gap up or down, to initiate the trigger? Do you treat the scenario any differently than a stock that has gradually moved up or down over a period of time to trigger the alert?
So if I'm worried about it, I'll go to technical open. I'll add a stock price move today, and I'll say, okay, this works, but what happens when the stock's up 5% or more on the day, right? And then I'll see if it ruins the results, then I don't want to do it. I'm testing nothing right now, but so did you guys see that? You can test what happens if the stock moves up. You can also do it, by the way, you can also do it for yesterday. Like, okay, what if the stock yesterday moved 19% and now I'm getting a trigger today because of it? Does that matter? So I would test it if uncertain. Yeah.
For new members who are new to advanced options and TradeMachine, what will be the easiest strategy to use of them all?
Well, I don't think they're particularly hard per se. I think that it's the easiest to understand a pre-earnings trade because, the entry is a day, right? If earnings are on the 21st, 14 days before is the 7th. And then I, look at a diagonal. So buy an option, sell an option. So this is probably the easiest. The other ones might require a little bit more technical stuff. Technical analysis, but if we're giving you the trigger, then that's easier. But yeah, we've become really comfortable with spreads, right? You got to spread in some way or another, not all the time, but most of the time. You really get comfortable with spreads, buying them, selling them, whatever.
Do we also get alerts for entry and exit prices for these today tab strategies and tickers?
So entry, yes, you have to set your today tab alerts. And not prices.
Not prices. Yeah.
Not prices. Yeah, the alerts are for technical conditions. For exits, no. So there is no exit alert. With one caveat: if the exit is, 1 day before earnings or whatever, then you can set an alert, a separate alert, let's say for Apple, and say, I want to know 1 day before earnings. And then you write yourself a little note like, close your position. Right. So you can do that. But other than that, no, we don't have price alerts. Of course, even that isn't quite true. We do have stock price alerts. So if you go here and go to stock price above, if you want to know the day that Apple goes below, where's Apple right now? If you want to know that Apple goes below 140, you could actually do that. You'll get an alert that says, hey, Apple's below 140.
Yeah, I also wanted to clarify, and I think you went over this, but I just want to add it again just in case. Once you save an alert, it's saved and continues to scan in perpetuity until you decide to delete it. The one exception to those rules would be, or actually there are a couple exceptions now, would be the stock price alerts and the calendar alerts.
Yeah. Oh, by the way, I don't know anyone cares what I do, but I actually use TradeMachine for a calendar for like Ophir's life. So like on the 28th, the 29th, right, set an alert for pins, right? This is, it's Pinterest earnings, right? So you can do stuff like that. But that goes away once it happens. So the alert goes, same thing with she was saying with the stock prices. If I said, I want to know when Apple's below 140 and it goes below 140, you're going to get the alert and then that alert disappears. That's it. It's not going to keep telling you every time it's below 140.
Can you please explain if there's a difference when a stock shows up on the Today tab versus an alert set based on the same criteria? If the inputs vary during the day, does the trigger disappear from the Today tab but still generate the alert if set by me, the user? So this is actually a pretty commonly asked question. So the Today tab doesn't remove tickers once they trigger. We tried that for like maybe 2 weeks when we first launched the Today tab, and it caused so much confusion, we just pulled that out. So once it triggers, it stays there. Now, if you have an alert set and it doesn't show on the Today tab, even though it's the same backtest conditions, it's probably not showing on the Today tab because it didn't hit the minimum filter requirements for the Today tab page. And you can see those filter requirements by clicking what is this Today page. And we have that broken down a little lower on the page. But yeah, the win rates and percent gain have to have minimums for a 3-year and 1-year backtest. So like for some of our older members, they have alerts that they saved in like 2017 when we first started. Maybe that backtest hasn't performed well in the last 3 years. So that's why it's not showing on the Today tab. Even if the conditions triggered, it's not going to show on the Today tab. Does TradeMachine have all indicators built in, i.e. squeeze, DIM, stochastics, etc., for building custom strategies? Not all technical indicators, no.
So you can see, you can see technical indicators, just click on the drop-down menu, that's all of them. So we may add them in the future. It's quite a bit of work because remember, we can't just give you a technical indicator and just trust that the math is right. So it's, we actually are pretty careful. So for example, there are errors in Thinkorswim on some technical indicators, it's fine. But that's okay. Like, what does it matter to them? Like, this is our business, so we have to be very careful. So we very well could add some, but if you signed up and hoped to get something more than this, I wouldn't hang around, even though we're probably going to add some, just because you're going to be frustrated. So either see if you can make use of these, or say, hey, this isn't for me. we don't want to do that false promises kind of, that hope thing. Squeeze is really better.
Yeah, but we have the squeeze and mammoth indicators. Those you can read more about on the Learn tab. We have very detailed breakdowns of what those technical indicators are there. Which,
yeah, it's called the TTM squeeze.
Yeah, I guess squeeze isn't on the keywords. Okay, well, we'll add that to the list. So I have to manually decide, right? Or can I set up alerts for closing too?
You have to. You can't set alerts for closing. You have to close. I mean, you have to pay attention.
Yeah, you can set alerts manually. It's not like when you click the add alert button for a backtest, it's giving you the open trigger scan, not the close. The close rules are in the backtest. So when you get the alert, you can open the backtest, look at the closing rules. And as Ophir was saying, you can set a reminder for the close, or if like some people use technical close triggers as well, you can set a technical trigger for that close. You'd have to do it manually. The add alert button's not going to pick that up, but you can manually set reminders for your closing rules. You talked about naked call buying and naked put buying. Don't you mean naked selling instead? Pure call and put buying is naked by definition.
No, I didn't misspeak. I've never seen anyone make money seriously in the market just buying calls or buying puts. It's considered a naked purchase if you're not spreading it. I'll tell you how to, like, just so you guys know, in the institutional world, like on the floor, let's say someone wanted to buy two different calls, 50 delta and 30 delta, but buy, not a call spread, but just buy. There's actually a name for it. And it's not meant to be offensive, but this is what we think of it as professional traders think of it. It's called a stupid. So someone says 50-30 call stupid. That means buying both. The name of the strategy is actually a stupid. I'm not calling you stupid. I'm saying that's how they talk about it on the floor. That's the name of the strategy. It's a legitimate strategy that if an oboe and an order book official comes over and there's an argument and you say, there's no such thing as a call stupid. There is, it is called a call stupid, and that trade cannot be busted because the name was confusing, right? The oboe can't bust that trade. It's actually called a call stupid. So it's really, really ingrained on the floor that you are not naked long calls or puts, or you're not naked anything.
If these trades and signals work, why not slap them onto an algorithm and trade every trigger automatically?
How much money you got, brother?
When the market decides it has been too high, too long, what are some strategies to mitigate the loss in a portfolio, i.e. using strategies on RUT, SPY, etc.?
So you can check it out. Some of my favorites are, it's actually in the Pro Scanner. It's my favorite because it works. The ETF technical ratio spread. This is just for ETFs. So the Qs or SPY, whatever, we can just SPY. This is really probably the only ETF trade I do. I'm not a big ETF trader. I know some people are. I know some people use TradeMachine. They only use ETFs, and that's awesome. That's cool. That's absolutely cool. I do this trade. I like it a lot. It's a little bit complicated. It's in English. It's said out loud, a 1 by 2 by 1 by 2, 1 by 2 by 1 by 2. I have a write-up about kind of how that works. But this is, this strategy loses money if the stocks go down too far, but it actually makes money if the ETF goes down a little. I can actually show, God help me if I change that. I can go to the Learn tab and go to Insights and then search for SPY. Yeah, it's the 1 by 2 by 1 by 2. And it explains like what this is. And there's a P&L thing. Oh, there's a movie. Yeah. Okay, we should probably add that to the Today tab. Learn tab. So this is what it looks like. So the trade starts here with that yellow thing. You actually make money as it goes down. Then you get your loss zone. It's covered. It's not naked. But you actually make money. So I like this. If the market's getting a little bit overdone, but I'm not like, oh, it's going to crash. I really like this trade. I'm collecting. I make money as it goes down. If I'm wrong and it keeps going up, no problem. I got all this. I'm making money if it goes up. But my guess is like, ooh, I think it's going to go down 5 or 10%. That's my sweet spot. So I really, really like the 1 by 2 by 1 by 2. The win rates are extraordinarily high. Like here's 10 years in the SPY, for example. So very, very long back test. So this is not TradeMachine being slow. This is just like millions upon millions of computations. But it's going to be worth it. So this is it's a very cool trade. Yeah. So, okay. So 32 wins, 4 losses in 10 years, right? Not so bad. Not so bad.
Do you rank which strategies are ranking higher than the others? No, but that's an interesting idea.
Yeah, no, I mean, I shared some results, real time, like actual results, like after the models were, they look very similar to how we tested them, which is good. We don't want to see something vastly different. But like, for example, we were considering sharing some stuff, like the fact that 14-day pre-earnings have been kind of a push for the last 6 months to a year. I feel like there's something we should tell the community, like, right? So like on the Today tab, we're considering having a thing that maybe has the strategy name, and then below it has last 6 months, 1 year, 2 years, like something like that. You know, it's like we're letting you know. It's not that we don't believe in strategy, which you should know. Like this has been, poopy lately, right? And this one has been awesome lately. This one's been awesome the whole time. But doesn't, I'm just, you know what I mean? So that's kind of our focus for adding features to TradeMachine. It's very focused on how to help you trade better and far less around what's a new shiny, object. So that's a really good question. And it's one that we actively talk about in our development meetings. Like how do we do that?
What do the arrows on the chart mean?
Entries and exits. So do I have a backtest tab open? No, why would I? Okay. So I'll just choose a strategy. Not that one because it takes too long. Bollinger buy the dip, Octa.
You're going to make her mad. She's not going to work for you anymore.
No, she's going to work. So green is entry, red is exit. Per the back tester. It's not like, I hate people, they just draw lines on charts like, yeah, this is when I would have got out, would have got in. Yeah, sure you would. So this is a machine that has rules that are, that's it. It's governed by rules which can logically be interpreted by a machine, which takes zeros and ones as input. So, and if you want to zoom in and see, I just kind of want to see that, you can actually go down here and start zooming in. And they're like, oh, okay, so right there, cool. So that's what the arrows are.
It's unclear where all the data is coming from. Is this based on OG's trades or some other source?
Oh my gosh, no, the data is actual data. So we have a trigger, like this one says open when this thing happens. We use market data, right? Option prices, stock prices, and these are the results. These aren't my trades. I'm not showing you my portfolio. I'm showing you TradeMachine's portfolio.
Well, it's not really a portfolio. It's a backtester.
Backtest, yeah, true. It's just it's a very fancy rules-based, super intelligent calculator.
Okay. Can you give your thoughts on this trigger with a backtest link? Why don't we come back to that later if we have time?
All right.
Because I think we have a lot of questions about just like how to use TradeMachine. I want to make sure that we focus on that because that's the focus of this one.
Yeah. You're the bad guy. You said no to someone. I got you.
I know. I hate saying no. Hi, Ophir. I know the risk tolerance is specific to individual, but can you please give some tips on risk management when it comes to option trading?
So I'll give you a little bit. Okay. Because this is a question that I asked like 4 different ways. I'm not talking about, I have these long-term speculations. These are something totally different. We had the speculation webinar. You can watch that. It's long. I think it's the most interesting webinar I've ever done in my life, but it could also be the least relevant webinar I've ever done in my life. It's not the right audience. So those aside, I'm never more than like 3 to 1 in one strategy. So like how many pre-earnings, if I say, guys, I have like 10 pre-earning strategies on, that means I have 30 other trades on or 20 other trades on. Like, just so you know, so it's just never, I'm just very careful. Like, I was actually 1 to 3 and I was actually 3 to 1, but if I have 10 of those on, then I must have like 3 or 4 other trades on. So in order to do the thing that I said we all want to do, like our aspiration, which is, roughly speaking, oh, hell no. I just want to repeat the aspiration because I think it's a good one. Right. So this requires following the rules and blah, 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 but it also requires an inherent management of risk. Right. So we each learn like when we get knocked out, but it should not be the case that a day like today, where, it's like, hey, market opens okay. No, sell everything. Okay, it can't be that today ruins your month. It can ruin your week. I mean, but you should have stuff in there, right? And if you want to, another thing I'll say is if you want to have, you're just like, look, dude, I really like the pre-earnings diagonals. I'm making a living on the pre-earnings diagonals. Fine. Then if you're going to have 5 of them open, don't open them on the same day, right? Get your Mondays and your Wednesdays. It's going to be hard to have a Friday, but get your Mondays, your Wednesdays, your Thursdays, and then you get a couple of your next week, Tuesday and Wednesday, right? The point is, hypothetically, I'm making the claim, right, that there is edge in the option market if it's done right. And if that's true, so how do we get that edge? And I say the only way to get that edge is to trade a lot. I say, okay, well, if we're going to trade a lot, then what's the one thing we can't do? Well, we can't get smashed in one trade because then we can't trade a lot, right? So as a market maker, for example, I'll give you the unfair advantage when we're buying on the offer, buying on the bid and selling on the offer. Basically, as junior traders, when we first start, they don't look at our P&L. They don't care. We'll end up making money. The advantage of buying on the bid and selling the offer is fine. They actually don't care about your P&L. What they measure you on, it's so funny. It's like, I don't know, like young guys are like, oh, how much can you bench press? I don't know. So it's just something stupid, right? So what is your bench press? And it's how many contracts you've traded. So like, I did 500 contracts today. Well, I did 2,000. They didn't even care if the dude who did 500 made $10,000 a day and the guy who did 2,000 lost 20,000 a day. They don't care. So it's because it's a game so based on edge. There's so much edge as a market maker. So we don't have that much edge and we don't have that much capital as retail investors, but we still need, just because something has a good win rate and historically a bunch of companies, we can't let 1 or 2 get us, right? It should be that 1 or 2 screw us, right? So we want to spread it out. Let's do 5 of these and 5 of these and 4 of these and, like that. And obviously there are certain periods where we're going to be in a lot of custom earning, a lot of pre-earning stuff. Yeah, of course. I mean, of course. So then again, so I have one that starts on Tuesday and Wednesday and Thursday. Like not everything on Tuesday, the day before Microsoft, Google, and Apple report earnings. That's crazy, right? And you got to know that that's coming. Part of that is personal responsibility. Yesterday was not the day to open a bunch of pre-earning strategies, not knowing what today would bring, right? You can't start yesterday and say, oh my God, I didn't realize Apple, Google, and whatever are coming out today. Right. You got to get your head up. It's not easy. Never do I mean to imply that any of this is easy.
Okay. Don't you need closing price to validate a signal?
No. So an open is based on opening prices, and then the closing rules govern the closing price. So for some of them, the closing rules are a stop and a limit, like it's up or down 50%, whatever. Sometimes it's just a front month leg expire. So it's a spread and the shorter term expiration option expires. That's your exit. Some of them actually have a technical close. There are technical closes. Buy the sell-off actually has a technical close. So, it all depends on the strategy. I know a lot of people say, and it sounds really good, that a strategy is only as good as its closing rule. And I got to tell you guys, I know it sounds right. It's just not true. You do have to have a closing rule. Otherwise, you have an open trade. And then what do? But it is not true that a strategy is only as good as its closing rules. You can have very good closing rules. If your opening rules suck, the strategy sucks. A strategy is not only as good as the closing rule. Wrong, false. That's some shit you get on some dude on Twitter who has 500,000 followers but doesn't actually trade, right? They just talk about trading and the ethos of it. Oh, bullshit. Any trader knows it's about the open and the close, and if you had to choose one, it's the open. Traders can work their way out of in an exit, right? It's not hard to know what to do when a position's at 40%. You're like, maybe I'll get out. Because you don't really have a close rules. You just, But if the open sucks and you're down 80% in day one, your closing rule doesn't matter. So yeah, the close really, really matters, but it's not 50-50. It's like 70-30. And what people like to say is that it's like the close is 90% of the edge. Wrong. False. The open is 90% of the edge. But of course, you must have some apparatus to measure the close. You must, if you open a trade, you must close the trade. You want to close the trade optimally. But the inspirational shit about how it doesn't matter how you open only when you close, dude, that's just not true. Those are people who don't trade. Like, listen to traders. It doesn't have to be me. But please just, ugh. I was just so tired of that garbage. Sorry, go ahead. It's not inspiring when you fool people.
What's your favorite strategy and why?
Mm-hmm. My favorite strategies are, well, speculations are different. You guys know my, so I like all of the buy it when stuff's going down stuff, buy the sell off, Bollinger, buy the dip and fade the dip. That's why I showed them. I actually don't trade this very often. I do trade it, but not very often, even though it's really good. I really, really like the long strangle technical. And, you know, pre-earnings diagonals is just, you know, that's my jam too, for sure. I will say that with ETFs though, I'm going to repeat with ETFs. I love that ratio spread. So as you guys can tell, I mean, just think about what I just said. You said, what's your favorite strategy? And I named like 5 things. And then you think about what are those 5 things? Like selling put spreads, buying diagonals, do a 1 by 2 by 1 by 2. I mean, this is how it works. Eventually, when you're trading enough, what becomes your favorite is winning. And we can only win if we do a lot of different stuff. Not crazy, not unmanageable, just several different types. Please don't think you have to master all 39 trades in TradeMachine. No, really not. I don't. No way. I don't even know what some of them are anymore. You know.
All right, the market has been almost straight up except for the V dip in March. Would this stuff work in a bear market? How would the strategies change for a more bearish market? Would it make sense to look at the overall market before picking strategies?
Well, so the 2 answers. First of all, you can definitely test any strategy for any time frame. What am I doing here? This is Bollinger by the dip, right? So you can just test. So we have this button 2007, 2009, because it's just convenient to say, how does this done in a bear market? Octa did not exist then, so we got to do something like app. You know, there's a little bit of survivor bias. So yeah, so I mean, it makes sense. It only triggered once. Let's see. What existed back then? Qualcomm existed. Intel existed.
I was going to say Intel.
Yeah. Googly Bear definitely existed. I don't think Fastbook existed, or it did a little. IBM existed. Oh, Caterpillar did. Disney did. Use the Dow, right? Here, put up. So, you know, check things. So this is a bullish strategy in the Great Recession. And this is hardly definitive, but 4 of the 2 did great, right? So these should work in all market conditions. What could happen is that they might not trigger in all market conditions. Yeah. So the Bollinger buy the dip probably won't trigger in a raging bull market. Just, yeah, not a lot of stocks are dipping through the bottom of their Bollinger band, and they have an RSI below 30. So that there's a natural selection to the strategy, but they should work. Hypothetically, that's how I tested them. I don't know. Yeah. I mean, I do know. Hypothetically, they should work. I can't guarantee that, of course.
So all of these have been tested through multiple market conditions. That's the only way they get added into the scanner.
Oh, yeah. I got the great. So you guys should watch some of the movies on the Learn tab, and you can just see me. I show it. I'm like, here's how it did in the Great Recession. Here's how it did blah, blah. Like, you know, you can see my thought process, my modeling process. Yeah.
But I think in general, it's always good to look at overall conditions when you're trading. Right?
Oh, sorry. So one more thing is you can say, okay, well, that's interesting, but like, how does it perform in a high VIX scenario? So you take Apple over the last 10 years. Okay. Again, millions. Okay. So this sucks, but it's fine. Go to technical open and you say, yeah. I want to know only in high VIX environments. So only when the VIX is, well, it's funny what high VIX is considered now. Only when the VIX is over 25. Right. And see what happens. You know, so you could see that the trades went down, the losses went down. Right. So you can certainly do that. Like, I love this trade. Just one thing I want to add. That's where is the VIX. So that's definitely something you should do. Could do. You could do. Not should do.
Okay. Evening. Sometimes the pre-earnings diagonal triggers, the pre-earnings diagonal trigger alerts will show delta for the diagonal that does not exist on the option chain. For example, it's only monthly strikes, no weekly. I usually just bypass these, but I'm curious why it shows up that way.
Yeah, it'll show up no matter what, because TradeMachine always chooses the options that are closest. I think it's perfectly reasonable to take an earnings diagonal and say, okay, if there is not a leg that expires before earnings and a leg that expires after, there's always one that expires after. But if there's one that expires before, then it doesn't really encapsulate the spirit of the trade, right? I talk about this in our options education thing, or I have to find it, the volatility webinar. So in that case, yeah, I think it's reasonable to just say no, pass. Yeah, it is reasonable to just skip those. Having said that, the results are correct, so to speak. It's just a calculator doing its job.
Could you share the historical performance of bearish and long volatility strategies? Thanks.
Yeah, so I will definitely do that for all of them at some point. It's a huge amount of work, and we're kind of changing our back end a little bit to make it easier. So I had to choose a few that I know everyone uses, but yeah, I think eventually the Today tab, let's say by the end of the year, maybe, like I'm not guaranteeing it, I'm hoping by the end, there should be kind of like, I don't know, like almost like a leaderboard, like kind of what's working, what isn't working.
Mm-hmm. I'm not sure if I missed the reason, but I'm unclear why this year's 14-day diagonals didn't work as well. I understand that Ophir wasn't hurt by this year's poor conditions since he used multiple strategies, but are there any market conditions where we can anticipate good 14-day performance or not?
Yeah, so believe me, had I known ahead of time, I would have said something. I don't know why, I can tell you colloquially that there used to be pre-earnings optimism, and look what happened today. The market melted down ahead of Apple, Microsoft, and Google. Those were usually good days, right? Optimism into the big tech, here we go, rally's coming. Now it's like, oh no, big tech, right? So this optimism phenomenon that we identified is in pause. If it's in pause for 2 years rather than 1 year, then it's not in pause, it's time to just stop, right? I wouldn't give up yet, but am I leaning more on like these big sell-off days? If there's, a Bollinger buy the dip, a buy the sell-off, a fade the dip, or buy the dip, yes, now it's like, you see me in community. I'm like, okay, look at this, right? So we start seeing days like this, and I'm like, give me a Dow component and fade the dip, and I like it. But yeah, roughly speaking, I think that's what's happening. We had this optimism into earnings, and the market has just turned incredibly pessimistic the last year. It's really the last 6 months. It's almost like the dread of earnings as opposed to like anticipation of earnings.
I got the alert Twilio yesterday and VRSK to buy call 40 Delta, but the Twilio went really low today. When do we need to place the trade after the alert?
So all entries and exits for TradeMachine are 15 minutes before the close.
On the day of the trigger.
On the day of the trigger, yeah.
Given the relatively poor recent earnings trades performance, what mix would you currently recommend? Earnings by the sell-off, momentum burst, technical strangle, or do you just use what is presented?
So I feel pretty strongly recently that we get these histrionics days or weeks, whatever, and you want to make sure you can like, what can you do so you stay in the trade without, you can say in a trade you're down 99% on, it's not going to help you. And so it's calendars, right? Bollinger buy the dip is a calendar, buy the sell-off is a calendar, a put spread if you can stomach it, short put spread. I like those. I like those more than buy the dip. So of the 4 right now, buy the dip is kind of, it's in the penalty box for me. Not that it hasn't been good. I'm not doing naked calls on that. I don't want to do a naked call. Buy the dip is a naked call strategy, but long call strategy. So I'm looking for things that I can hold on to the trade. If it's a 60, 30-day diagonal, I got time. I'm not saying I'm enjoying it, but if that thing is down 16 days from now, it's okay. It's fine. Let's see what happens. You know what I mean? If you're doing a pre-earnings trade, you can't wait 16 days. The thing's over, right? So I'm not giving up on pre-earnings strategies. I'm just letting you guys know that. I'm noting, I noticed myself it wasn't working as well. So when I looked, we looked more deeply, I was like, oh, well, yes, it isn't working as well. But I almost could have guessed it, right? I think we all could. We're all doing them and going, dude, for every 2 wins, there's 2 losses. You want to throw your monitors out your window. So, it's this is the time to have different stuff. And right now, to answer this question in particular, You want trades where you can hang in there, right? 60, 30-day diagonals, you can hang in there.
How do you do butterfly strategies?
Well, you sell two in the guts and buy one in the money and one out the money, but it's not, I mean, you can, like.
No, I think they're talking about in TradeMachine,
Oh, I got you.
custom
So-
strategies. Yeah.
Yeah, so you go to the back test tab. And let's just say you want to do, no. Let's continue to pound Apple. So we want to do custom strategy. And let's add a new one. We'll call it a money butterfly. So you want to get short the guts twice. You want to get long the wings once. I haven't put any, it's custom earnings. This is a weird trade. Yeah. So let's just let it roll, whatever the technicals are. Let's actually put some technicals. Oh, it's actually okay. So yeah, so that's how you do it. That's an at the money butterfly. I just did a custom strategy.
If I made my own strategy using my own technical indicators and it selected a set of symbols for me, how can I just tell if I discovered a statistically significant trade? How can I tell if I did not overfit parameters or fall prey to selection bias?
Yeah. So
so we don't select the symbols for you. You have to provide a
no,
list.
yeah, I think this. Oh, go ahead.
But yeah, this is actually, let's go into detail on this one because I see this happening a lot and I think it's good to cover.
So the answer is you want to choose, let's say 200 tickers. Okay. You can do 20 at a time. So it's going to be burdensome. It's going to be, 10 things. You want to choose an in sample and out of sample, and a part of your out of sample has to be out of universe. So out of universe means not only have you never looked at those tickers before, you haven't looked at that time period before. My out of universe is usually 2007 to 2009 and, like the most recent 6 months. Something like that. So you build it on 100 companies. You can actually have 3 samples. One's called a cross validation, but it's okay. I don't know about it. So you build it, you say like, okay, you fit it to these 100 symbols over this time period. It's now locked. Save the strategy. You then try it on the other 100 symbols, right? In a totally different time frame. And you measure if the average return, right, is different, if the win rate is different, and if it's statistically significant. Statistical significance is not that hard to measure, in particular with win rates, because you'll actually see if you do a portfolio, we do a part of that for you. So popular stocks, just get long a call, whatever, it's fine. When this is done running, okay, it's gonna take too long. When this is done running, it'll give you at the top, boom. It'll tell you the wins and losses. So, right, that's your win rate. To test for statistical significance on a yes or a no, it's called binomial. Right? So you can do a binomial test for significance for the win rates, things like that. So that's how you would do it. It's a really good question, and that's how you build it. It takes time. We have TradeMachine Platinum, which is not available right now for various reasons, but at some point we hope to extend it. And I think Platinum users have 100 symbols, so all of a sudden it's much easier. Build it, good. Test it, okay. So it's coming. For now, we have 20 symbols. Also, 100 isn't like a magic number. It doesn't have to be 100. It could be 60 and 60, whatever. But that's how it's done.
With so many notable technical breakouts on the Today page, how do you decide which ones to possibly trade?
So I'm going to tell you guys a secret. I don't actually trade the notable technical breakouts. The only one I sometimes do is CML oversold, because this isn't really CML oversold. It's Sophia oversold. I just invented it, and because I found out it was pretty cool. CML oversold, a portion of that is in by the sell-off. So I do tend to look at this one. So look at all the Chinese stocks. So I don't use it that often, to tell you the truth. I think you can. Let's put it this way. if I was going to build a new scan for us, I would probably start here, right? I'd start, test it, probably take me 3 weeks, 4 weeks, but I don't trade it that often. If I can't find something, I have a lot of pre-built alerts, over 1,000. If those aren't going off and I don't like anything here, okay, I'm not trading today. I have enough positions. I don't have to. Sometimes I have to tell you the truth. Sometimes it's a relief. I don't see it. I'm like, oh, thank God I don't have to trade anything new today.
This one. Okay. Please explain in detail the Bollinger breakout indicator.
I think I did, but also, so you go to explain and then you can watch this movie, right? There's a password protected, go to video walkthrough and it explains it in detail. It also shows you the in sample, out of sample.
Yeah, actually, can you pull up your backtest tab if you have it open anywhere? Why would you have a backtest open?
Exactly. Yep.
Anyway, go under technical open. So for some of these technical indicators, if you don't know what they are, select.
Oh, I see what I see.
Yeah. We actually have.
Learn more about Bollinger.
So that you can learn, and like this is just educational. It's Ophir hand selected which education articles from other sources he put there. So he tried to kind of pick the best ones and to make it easier to understand if you're not familiar with a certain technical indicator, that's there. We don't really do options education. So if that's
except for speculation,
it's something on our radar. But it's kind of expected that if you're using the options backtester that you're already pretty familiar with options. So, but it is on our radar for the future. We have some options basic stuff, but
yeah, if you're to learn to have options basics, there is some stuff, but yeah, we don't do it. Also, we did do education on speculation, but that's sort of advanced.
Really advanced. Yeah, we're not. I'm just going to be honest. This isn't a great tool for like just starting out with options trading. And we try to be pretty forthcoming with that. If you like email support when you're getting ready to sign up, like you should have at least in beginner's level knowledge of options trading before you join TradeMachine, I would say.
I 100% agree. The only caveat is...
Not saying this person doesn't. They're asking about technical indicator. That's not indicative.
No, it's okay. I agree. I say that every webinar. It's just not for option beginners. But if you are an option beginner and you took it, then use this month because you get a refund if you don't like it. So don't trade. don't learn. You're going to learn by losing money anyway, but don't do it too early. So start figuring out what we're talking about. Look at the Today tab. Choose the ones you would have done. It's called paper trading. Write it down. Don't trade it. Paper trade, and see if you're starting to get the knack. But I mean, when I say paper trade, I mean, write it down. He said 40, 30 delta. No. Go find the 40 delta, go find the 30 delta, write it down, write down the price, right? So you can paper trade your way into learning a little bit, but in general, yeah, we're not an education platform for beginners. We can be and have been an education platform for intermediate to advanced.
Hi, what does QA stand for in the strategy names? That's just our way of denoting the strategies that we built for our scanner.
Yeah.
So it'll have a QA in front of the name. If you happen to note to open a backtest of ours from a scan that is using a custom strategy, it automatically saves to your custom strategies whenever you open any custom backtest link. So those QAs are from ProScan.
QA, by the way, if anyone really cares, the reason it's QA is because Jason and I were QAing them, quality assurance, and then we just figured, well, let's just make that the name. So there you go.
Although I suppose it's a possibility that someone in the TradeMachine community uses QA to name their
That's true, and they've infected,
infected
everyone.
Yeah, that's true. If you happen to open it, yeah. Is closing based on the last 15 minutes trading or as soon as the limit hits? That's a really great question. We get this a lot. All stops and limit calculations are applied with 15-minute before the close prices.
Yeah, all entries, all exits, all triggers, all of it. Having said that, I just want to address that. So that's 100% true. If you ask me what Ophir does, I have my limits and stops set, and if it gets hit, I just goes out in the middle of the day. I can't check everything. I have too many positions to check everything 15 minutes before we close. And I have no evidence that that is better or worse. It could be worse, could be better. I have no evidence either way. But TradeMachine is very particular. Every entry and exit, no matter what, 15 minutes before. And we do that again. Oh, pardon me. Go ahead.
So we only have end of day options data. We don't have intraday options data. This is why. We have intraday stock prices.
Yes.
So our moving
tick.
averages or using real-time calculations
From the exchange.
or alerts triggers, but we don't have intraday options pricing. Ophir, do you trade Lotto Fridays? If so, what strategies do you use in TradeMachine?
That's funny. I used to trade Lotto Fridays because I'm a degenerate. I just lost so much money doing that. Like I just have great weeks. And then I ended up just looking at my P&L. This was a while ago. It's like 2000. I stopped a while. It's 2015, whatever. I just started, you're supposed to, when you're the teacher and the student, right? So you check your own trade log. And I used to look at it. I was like, dude, if I just stopped doing this dumbass trades, I would have had a way better year. So I just stopped. I don't like them. The truth of the matter is, even if you're speculating, if you're doing it right, it's not gambling. If you want to gamble, you can. And I would rather you gamble here than in a casino, because at least there's maybe edge, but it's just gambling, man. Like the most destructive thoughts for traders, I can tell you right now, the most destructive thoughts for traders are those of grandeur. I want to put in 10,000 and make $1 million this Friday. No, you're not. You're going to lose 10,000. Like visions of grandeur just crush traders. It's consistent profitability over the long time, and your wealth will build large. It just won't be as fast as you want it to happen. So no, I don't do Lotto Fridays.
How exactly to use the AVWAP indicator with some of the other strategies in TradeMachine?
If you're an average volume weighted average price, that guy, then you know how to do it. I don't trade with VWAP. So anchored volume weighted, blah, blah, blah. So I don't even have a good answer. Maybe someone in community is a VWAP trader and they'd be like, hey, this is the best settings, So.
Should one avoid option play on a stock he's long and heavily invested in?
Yeah, I mean, unless you're hedging, I can't, I have some speculations on stocks I'm very long. So it's, it's personal. Just for all trading and investing, just be risk. No single stock, no single day, no single trigger should ever ruin your year or really even your month. It could ruin your week. Oh, well, I'll say that. You can trades that ruin your week. That definitely happens. So.
Can you add the short the strangle strategy?
Add it where I have a pro skin. Is that what you mean?
Mm-hmm.
It's in the scanner.
I think that's what they mean. Short the strangle.
I have a short strangle. Yeah. Boom. Oh, I guess I have long strangles. I don't know. Lots of strategies.
We'd have to test it against the market.
Well, it's not just that. We face, if someone were to sue us, they would lose. But if I'm just throwing out like, hey, look what's triggering a short strangle, you can see how that can go awry, right? Short a strangle, unlimited risk. Somebody says, oh my God, they told me to do a short strangle. Now we're in court saying we didn't say anything. We're a back tester, but that's one of those things where I have to act in the best interest of traders, but 1% of the time I have to act in the best interest of a corporation. And in this case, it's not in our best interest to put that up on a board. I'm being completely honest with you. You can test it yourself and set your own alerts.
I was going to say, you can definitely back test it.
Oh, completely. Of course, 100%. But it just isn't in the best interest of this enterprise to have that show up on a page. Naked short strangle. It's like, yow.
Okay. What are Ophir's thoughts on IV rank or IV percentile in general, and when considering whether to buy or sell options? For example, when I'm considering a fade the dip alert versus a buy the dip alert for the same underlying, I always look at the IV rank, IV percentile.
So if you're doing a spread, So buy the dip is not a spread, but fade the dip is a spread. If you're doing a spread, it doesn't actually matter. As long as it's a relatively tight spread, not an obtuse spread. Buy the dip, I guess it could matter. So in general, from what I've seen with IV rank, or IV percentile, I should say, is that you would think, gosh, if I only buy when vol is low and only sell when vol is high, I'll add edge to already edge strategies. And I think actually that would reverse the edge. From what I've seen as a market maker, when vol's going down, I'm a crazy seller. And when vol's going up, I'm as much of a buyer as I can stomach because I don't like buying vol. So that's it. Now, I haven't back tested it, so I don't know. So that probably gets to the larger question, like why don't we have that back testing? So I'll tell you why we don't have that back testing. And we might soon. I can get historical IV rank or IV percentile, no problem. From SIBO, easy. Actually, we had it. We were publishing it for free on CMLVis. Right? Well, what's one thing I couldn't do? I couldn't tell it to you in real time without real-time options. So you could back test something. It's like, oh, this is awesome. I'm going to set an alert. Yes, but you'll never get the alert from us because we can't tell you in real time what the IV is without real-time options. And real-time options require Opera, and that costs a lot of money to you too, by the way. And you got to register yourself, the whole thing. So we decided not to put it in. Alicia had a pretty good idea, which was like, hey, people can backtest it. We can get the data for backtesting. And if they want to know when it's going to trigger, that's on them, right? So we can get you 85% of the way there. The last 15% is you having some way to monitor it yourself. And her answer was better than mine.
Yeah, I was just thinking, like, if people are asking to backtest it,
yeah,
it's probably because they have another source that they're using with IV rank or IV percentile.
Yeah, so
may as well make it available for backtesting.
Yeah, so it's now, this was completely off the table for me when I realized I couldn't alert it, and I've been convinced that I should reconsider at least that, because getting the data to backtest is not that hard. We actually were consuming it and we stopped consuming it from SIBO. It's no big deal. So maybe we do that,
Well, that gets us there, and we can measure if people are using it very often and decide whether we want to move in that direction.
Because we're always watching.
It's creepy. Okay, results provided are not compounded, right?
Well, so a backtest kind of is compounded. So you start with $100, whatever, and your first trade makes 21%. Now you have $121. If your next trade makes 21%, you're going to have $144. Right? So it is, a backtest is exactly as a backtest should be. It follows the path. It's path dependent. Yeah, Ben, that's the best way to say it. A backtest is path dependent.
Is there a market for purchasing customized strategies by fellow members showing great backtesting results?
So it's an interesting, sort of creating a market. So for now, that market is free. It's just on community as long as someone's sharing it. We haven't considered the idea of what you just said, which is like people create their own custom strategies. They do all the backtesting, or they're platinum members, whatever. And they're like, hey, do you want to buy the strategy? Whatever. So that's like a marketplace on TradeMachine. It's an interesting idea. I don't think we've gotten there yet. That would definitely push us toward the platform realm. So for now, no. So by the way, I didn't show anyone, but if you go to community, right, you can go to TradeMachine community and start talking to people. On community, there is a backtest sub stream. This only shows posts with backtests. And yes, we know this loads slower than molasses. We're deciding whether we want to invest in actually doing this right. So for now, it's sucky.
Yeah. Well, the more people use it, the more likely we are.
That's true. The more you guys use it, the more you use it, and the slower it gets, the more likely we are to build it right and as an app. I hope I didn't embarrass anyone by showing their tweets or their posts.
Amount risk, same all the time or average?
No, amount risk is actually amount risk. So, okay. So first of all, this is one where the learn tab is super helpful, because if you just put amount risked, it tells you how to do it. But the amount risk, okay, I'm going to pull up, make sure it's appropriate. Yeah. So I'm going to show two different back tests. They each start with $100 and they each had 4 trades, right? And each of the trade, so it's plus 20%, minus 20%, plus 20%, and minus 20%, randomly. So if this one starts, so let's say one of them starts going up and one of them starts going down. So this one is going to be equal, I'm not going to do that. It's 120, right? And then it equals, 0.8 times that. And then it equals 1.2 times that. And then it equals 0.8 times that. So that's all. This one starts opposite. It goes down to 80. Then it equals, this wasn't a good example. Never mind. The point is that it's path dependent. And so if a back test starts out, actually, this actually is a good example. It's okay. I'm gonna do this. If this, let's say this back test ended on 2 trades. Let's say it went. So let's say they both ended in the same place. Okay, so it's a back test. They both ended at $120, right? They both made 20%. The amount risked is measured. In this case, let's say this is just long an option. So you risked $100. But here, you've risked more than $100. You've risked $105. You've lost, right? You keep going. So this one amount risk would be 105. And this one amount risk would be 110, even though they ended up in the same place. So the amount risk is also path dependent. Every back test is path dependent. So that's how amount risk is calculated. You can read about it here, how we do it. But if a back test starts winning off the bat, right? Starts at 100, 120, 150, 180, then the amount risk is never going to go above 100 because you're not risking anything more than your original $100. If it starts out losing a lot, then your amount risk can be very large.
Sorry, muted myself. In line comparison charts, should it be percent and index, not dollars?
In line comparison charts? You mean on the back of step?
Maybe in your slideshow, did you have something?
No.
I'm not sure, but if we didn't get to that, like maybe you can resubmit that question.
Yeah, just try again. We're trying community. Tag me in community.
Yeah, tag. That's a great idea, actually. Tagging Ophir in community, because we're coming up on the 3-hour mark in about 30 minutes. So I'm just going to throw that out there. If we don't get to your question, you can always ask him in community. Or you can email our support team. They're great. Amanda's in there. She's our star right now. All right. Let's see. How do we keep track of the triggers in the Today tab? i.e., I would like to track how the alerts do over a few months. So we have a little bit of a hack for this. I would sign up for all alerts, email alerts, such a Today tab, all alerts, put them in a folder in your email, and then you can open the backtest link and review it after. That's kind of what we're doing right now. We are considering a historical archive where you can kind of revisit dates with the triggers, so you don't have to do that. But right now that's not something we have available. So it's on our radar, but the easy workaround is just to use the Today tab alerts so you can see the date and time of their trigger. So
it's a good hack.
Yeah, it's kind of a hack. Let's see. How does Ophir or other members can use the ProScan?
Oh, I showed you how I use it. I look at the strategies I want to do, like the long volatility ones, stuff like that's called volatility burst stuff, and I just set my alerts. I have a lot of alerts. So I have no problem finding things to trade. I have a problem just chilling out and not trading all of them. You can quickly become overwhelmed at TradeMachine. I don't think anyone who uses TradeMachine properly is ever going to say, I can't find any trades. I have 2 TradeMachine accounts, and just this one has, can you see this little thing?
Yes.
You can? I can't.
155 interests.
Oh, so mine is covered because of a Zoom thing. What is that? How many alerts do I have?
155. That's not a lot.
Yeah, this is not my main account.
It's your webinar account.
Yeah.
Okay. Let's see. Answer live. Do you plan to include biggest or max percent drawdown in stats?
So we do for stock back tests. We don't have it for options back tests. I don't think a max drawdown makes a lot of sense for an options back test. We could, but if you do this, max drawdowns here for the stock. I don't know why Apple isn't working, but it doesn't matter. You gonna ask a question?
Sorry, I was answering a question. In case the same ticker is alerted under 2 strategies at the same time, does the platform give you automatically the optimum one with the highest probability of success?
No, it'll just get both. So something that's interesting to know, buy the dip and fade the dip are the exact same triggers. If you look at their technicals, they're the exact same technicals. It's different strategies. One sells a 1-month put spread. The other one buys a 2-week call. So it shouldn't be so terribly unusual to see both showing up. And I say, well, if they're the same trigger, then why is AT&T here but not here? Well, the buy the dip didn't work well for AT&T, but fade the dip did, so it doesn't show up. But you should see them overlapping, and it's okay. You can, choose it. If it's a similar strategy like fade dip and buy the dip, I wouldn't do both. That's just doubling down on the same ticker. And if you really feel that strongly, then just double down on one trade.
In case this, I just answered that. Besides delta, does the platform take into consideration the other Greeks in the calculation?
No, you don't. As long as you're hedging options with other options, you don't have to worry yourself too much about volatility or things like that. You should be pretty good.
What features are you working on in the next few months for TradeMachine? We don't really talk about our development list publicly, and I'll say we're working on I think 3 new products right now.
Yeah.
So we're not going to talk about adding stuff to TradeMachine right now, other than usability features. So those are definitely the next step on the docket. So that would be, and by usability features, I mean things like in ProScan,
exactly.
You're going to be able to have more custom filters, and you're going to be able to, so just run a scan. There's going to be like a little checkbox next to it, and you're going to be able to select every backtest you want an add alert for, and click an add alert button, and those are going to be added to your alerts portfolio without having to open a backtest.
Just skip the backtest tab. Exactly.
So, I mean, if you're already familiar with that strategy, you don't even have to open the backtest. Well, that's always a good idea to review a backtest before you send more, I think, but more data is more data. Okay, so did the bullish strategies work from 2007 to 2009?
Yes.
Yeah. Long time TradeMachine member here, first time TradeMachine webinar question asker. Oh, thanks for submitting your question. Any plans on incorporating other corporate event data to the backtest, i.e. investor conferences and events?
So Wall Street Horizon is the definitive source for events data, including earnings. We use them for earnings, and they have stuff. So maybe, we have many possibilities about what we could add to TradeMachine. Like, do we want to add more features and more data? Or do we want to make it more user-friendly? Or do we want to add new strategies? Or do you want to just make the Today tab show you things that are only working now? Or so we're considering a lot of things and promising nothing other than I promise you we're looking very hard.
Okay, looks like Amanda's answering that one. Are there auto trades set on every strategy? I think you're asking if we can do automatic trading in your brokerage. We can't do that. We don't do that. The back tester does, kind of. I mean, it automatically opens if a trigger's triggered. If an open trigger's triggered.
If something triggers, it automatically happens. And if something just rolls every 30 days, some dumb strategies, not dumb like the bad strategies, dumb like they don't have a lot of logic. They roll every 30 days. It'll just every 30 days, boom, boom, boom. That was that silly Roku example I gave you at the beginning.
Follow-up question. When it says sell 40, buy 30 on fade the dip strategy, is it okay to sell 45, buy 35? Because a lot of times I will not see the exact 40, 30 delta in the option chain. Yeah, so TradeMachine uses the options that are available that are closest. So if 40 and 30 delta or 45 and 35 are the closest to 40 and 30, then that's what TradeMachine is going to select. So you're on the right track.
Yeah, it's not only okay, it's the only way to do it. That's exactly what's happening.
What type of options trades do I need to learn to be more profitable instead of just doing puts and calls? Thanks.
Yeah, hold on one sec. So I just want to show people that thing about deltas, but you know, we're getting crushed again. So
I actually don't think we are. I think it's our internet connection. Because I'm getting feedback from users that are using it and having no trouble.
that doesn't look like the problem. Yeah.
All right. Well, I lied.
Well, I can't show you.
I told you not to make her mad. I did warn you.
Remember if you click on the details, click on a back test tile, it opens it up. On the right-hand side, you'll see the deltas. You'll know the strategy, for example, fade the dip is 40-30, but you can see the deltas that are actually getting recorded. They're never exactly 40-30. They might be 46-32 or whatever. So just, you can actually see quite clearly how closely you can get to the deltas as they're prescribed.
What type of option trades do I need to learn to be more profitable instead of just doing puts and calls? Thanks.
That's what the slideshow was about, I think. So I gave 7. So that's a good place to start. It was buy the dip, buy the sell-off, buy the dip Bollinger, fade the dip, pre-earnings 14-day call, pre-earnings 14-day diagonal, MACD diagonal.
Now, we did this great webinar in January, and it was on the Learn tab, and somehow it disappeared. So we need to get that back up there. But you can email support, and they'll get you that link for that webinar. And that goes over diagonals in really good detail. Complimenting you all. Brand new to CML. Welcome.
Hello.
What constitutes a win or loss for backtest data? When is a winning trade closed and a losing trade stopped out? I must have missed the parameters.
So some trades, they close on days. So it's a 30-day put spread and just closes when the puts expire. And it's considered a win if the options position is higher or lower in this case than the start. Other ones have very particular closes, like 7 days before earnings or 1 day before earnings or when the RSI goes above 40 or whatever. So each trade is different. When the triggers are met, the trade closes and we look at the value of open to close.
Yeah, and if you click the backtest tile, you can see the full trade details and you can see the P&L for each trade. And it's even downloadable into Excel. So
if I could pull one up, I'd show you.
Yeah, I don't know what's happening. I'm having no problems on my end, but let's see. Can you backtest index ETFs to add a hedging aspect to your portfolio?
Yeah, 100%. So we have SPY, every ETF. Absolutely. Every ETF that has options, right? So for sure, SPY, IWM, QQQ, I shouldn't have started. DIA, all of them.
For pre-earnings 14-day, do you count the weekend or just trading days? i.e., I want to test 9 days out. Do I count Saturday and Sunday in these 9 days? 14, yes. Yeah, that would be calendar days. So you would count the weekend. It's only trading days for before earnings if it's five or fewer days.
That's right. Go ahead.
You're just like proving to us that your internet's working.
Yes.
Can you add the short, oh, we already answered that. Ophir, can you explain how the TTM squeeze you built is different from John Carter's?
Yeah.
That's detailed in the
Learn tab. Yeah.
video on the Learn tab.
Yeah, it was a mistake I made anyway, but now people are using it, so it's fine. I don't mean it was make like the numbers were correct, but I shouldn't have been so finicky about something that's so widely accepted. If you go to the Learn tab and search TTM, it's very particular. Like this is the normal squeeze that everybody uses that I should have used. Here's how it is, and here's how ours is a little bit different, and it's very, very particular. So we really detail it. We knew we had to. I just made a mistake.
No, you just slightly optimized it and it causes some confusion, but that's all really detailed in the article there.
Yeah. Yeah.
I wouldn't say it was a mistake.
Yeah. I mean, I went too far.
Improvements are always good. I am a CML and TradeMachine member. I want to be long, very long, numbered stock picks using options. What will be the best way to do that? Can you walk through an example? By the way, I'm hoping OG has a story to tell in the end.
I didn't think of one. I'll see if I can name one next time. So you can't really, I mean, you can. I don't think you want to back test getting very, very long something you have conviction on using the past because your conviction is probably based on like now moving forward. So I don't think TradeMachine is particularly useful in that regard. That speculation webinar I gave, which is kind of what you're saying, like how do I get very, very long in a leveraged way with being risk aware in a top pick, like in a spotlight top pick. That's what the speculation webinar was. So you should ask support for that link. I think that will answer your question. I just don't think you can use TradeMachine for that. But there's definitely a very lengthy answer toward that. Yeah, it's
okay.
ours.
All right. Since diagonals are used often, is there a plan to make them easier by using a pull-up window for time and delta like settings for deltas rather than having to make new custom strategies every time I want to tailor it?
You know, that's an interesting idea. That would come under usability, which kind of comes under Alicia's purview. So depending on which direction we go with that and she takes us, it's possible that we make some things just like easier. She also had this idea about back testing DCAing, right? So dollar cost averaging. So not a back test specifically, like, so you open up a window for DCA. It's like, okay, every month I want to spend $100 and buy more fill in the blank stock and see how that would have done over 3 years as opposed to just getting along. So that I consider like usability issues, and it's possible. A lot of usability issues are on the table. What we want to do is make TradeMachine easier to use, not make it more complicated. I know that sounds obvious, but you'd be surprised when you start trying to make things easier, how you can make it more complicated.
How do you figure out the optimal close trade after number of trading days when backtesting? Can TradeMachine tell you the optimal number of days to close a trade?
We don't do that. You can try to. There's a close trade one section. You're asking like, how do I do it without guessing and checking? I don't think there's a good way, but you could. I remember I gave that answer about that. Someone asked, hey, I have a strategy I want to test and I want to make sure I'm not overfitting. Remember I said, okay, so then choose 200 stocks, build it on 100 in one period of time, check it on 100, a different 100 in a different period of time. That's how you would see like, okay, is this a good closing rule? Is this, is this statistically significant? That's how you would do it, very broad strokes.
Is there a way to filter out wide gaps in bid-ask spreads on a trigger? For example, Ulta shows up on the Today tab page frequently, but the spreads are so wide that I don't want to consider it.
So the question is, are there ways to, no, I don't. There's anything on the Today tab that has anything on the Today, anything with a liquidity filter doesn't show up in the Today tab, right?
That should be the case.
Okay. So then you're talking about very particular things. No, I mean, there's a version of the world, I suppose, where you say, only show me things where historically the bid-ask spread wasn't more than $1 or whatever. But we don't have that now.
Can we use one strategy for something else than recommended? For example, can I use fade the dip to buy a call spread instead of a put spread? I mean,
well, you can test. So buy the dip actually has been used with a long call and a short put spread. So I'd actually feel pretty comfortable using that signal for getting long either selling put spreads or getting long calls or call spreads. That one I actually be okay with. The others, yeah, I mean, you can try, you can test it. You can, the greatest test is your portfolio. So, like it's an interesting question. Like, could I use Bollinger buy the dip to sell a put spread instead of buy calls? Right. Same idea as fade the dip and buy the dip. You could try. Yeah.
Yeah, so if you have like a strategy, you want to test something else under, you can just like open the original backtest link from the Today tab and you can start customizing it. So you know that you're getting like the right backtest, but then you can start like playing around with it, being like, what if I tried this with a
Yeah, it sucks. Oh, it's working. It's a miracle. So this was on the Today tab as a moment. So this is a momentum play, right? Just straight up get long diagonal. But you could say, well, I want to be a little less bullish. I want to sell a put spread using the exact same. I mean, if you open it up, this is the MACD momentum trigger, right? So you could try that put spread, stop it, short. I mean, it should work. Yeah. I mean, if it works getting long, then it should work getting not short, right? So there you go. It's actually an interesting idea. If something goes through the lower Bollinger, oh, this is MACD. Okay, interesting. All good ideas. So many trades.
It doesn't seem possible to model 0 days to expiration options. Is that is that strategy too risky? Sorry.
No, so remember what I said at the very beginning. I'm going to read the exact words. I said days to expiration has nothing to do when an option is traded, just the expiry. So when you put 0 days to expiration, TradeMachine says, okay, what's the closest to 0 days to expiration? It's probably going to be 7 days. There is no such thing as a 0 or a 1. 0 doesn't make sense because you're saying, show me all options that are expired. That doesn't really work. But if you do 1, the results are very similar to what you saw before, right? It's just, okay, what are you doing with 1 day options? Well, on November 23rd, it looked at the December 21st options. I mean, that's because the closest to 1 day to expiration was about a month. So that's all it's going to do, right?
You went over days to expiration and how it functions in the back tester, right?
I did, yeah.
Okay, just making sure. All right. Do you guys have any AI built in here? Any plans to do that?
So AI is just a fancy phrase for deep learning. And I don't know if there's room for, let's say, hidden layer neural networks, convolutional neural networks in option trading. I could try, but just remember, if you're doing deep learning, it's definitively so. It's a tautology that it's black box. I mean, even people that create deep learning models, when I created my deep learning models, blah, 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 I couldn't actually tell you what was happening, and I created it. So it's black box even to the creator, right? We don't understand what's happening in the inner layer, in the hidden layers, and particularly if there's many hidden layers. I mean, we can, as scientists, we kind of go back and forth and see how the weighting is changing. We don't really know what's going on. So what I'm saying is that it would be very black box, right? You wouldn't be able to assess it in anything other than here are the results. You couldn't say, I don't like this trade. I don't like that trigger. I want to change. You can't, no, that's it. It's complete and utter black box. And I don't think that people want a lot of black box. Our chairman, who I built FAM for, right, the thing that made me famous, that was black box. And he said, why don't you do that for TradeMachine? A long, long time ago. And I said, Jim, it took me hours and hours and hours to explain it to physics PhDs. Like, we want to tell retail investors who get screwed all the time by people selling the next hot thing that they should just trust it. Like, I don't have the stomach to do that to people. Even though I know we're good actors, how would you know we're a good actor? So it's a very, very hard sell. It's a very hard sell.
How do you use or recommend, how do you use or recommend the use of margin? Sorry.
I can't really talk about that. Margin is a tool that investors and traders use when appropriate. I don't think you should live on margin. Funny story about that, actually. I used to pay my rent off margin. That was in 2000, the .com. I could tell that story. When appropriate, it's okay. But I just think you could just do great in the market and never touch your margin.
How many individual trades are you in at any given time? How many completed different trades per month on average? Just to your point of trading a lot, etc. Thank you.
Well, I mean, I'm probably trading every day. I had a couple days this month where I didn't trade, and it's like a great relief. How many trades are open? Whew. I don't know, man. It just varies. I mean, I could have like, it can get pretty funky, man. I can have like 30, 40 trades open, but I can then have as few as 10 or 5. I mean, you know.
Oh, so they added, so like 50 trades at 2% each. Do you also keep a high cash percentage?
I don't keep a high cash percentage. No. I mean, I manage a trust account that has a high cash percentage, but you're talking about my trading account. No, I don't keep a high cash percentage. I'm okay with cash, but I tend to want my cash. I tend to believe, I believe in myself and my trading, and it's proven to make me profit, and cash has proven not to make me profit. So I try to have it in. I don't force the issue, but I don't think anyone looks at my cash balances and says, whoa, like they're not. I think I might have as little as, let me see. I think I'm at 2.5% cash right now in my trading account, and I'm ready for more stuff.
Ophir, can you please quickly explain pre-earnings diagonal? I am new to CML from Simpler. Welcome.
Welcome indeed. Yes. So I'm going to punt on that, but that's because you're going to email support and they're going to send you the webinar on the diagonal. It's actually like a 2-hour webinar. So it's not really good for the last 11 minutes of a webinar for Q&A. It's a really good question. And I think it's a very high intellect question to ask when you're unsure, to say, okay, but I'm not just going to do this because I believe it. I want to tell me about this thing. Why does this work? Why should it work? What's the hypothesis? I love the question. I love it so much that I did a whole webinar.
Okay. 2 questions. For the strategies, there is the closed trade win portion at the bottom of the left-hand column that for some have percentages or days while others show 0 for everything. Question 1. For strategies that have non-zero info, are these criteria used to calculate the win or loss?
Yes. They're used to calculate. So for example, they signal a close, and once they trigger a close, the P&L will be determined, right? So there's only one thing that determines the P&L. It's the option prices, right? But these trigger closes for sure, stops and limits. Zeros are a way of saying, blank. Like they should probably just say blank or something.
First question 2, for strategy that showed nothing for closing, when I look at the resulting charts, I see that the stock is not doing a straight from entry to close. So what is TradeMachine using as a close criteria?
You'd have to share that back. Because if this zeros is another way of saying not in use. It's nothing's going on here.
Yeah. If you email support@cmlviz.com with a backtest link for an example, you can find the backtest link in the top right-hand corner. It's a little icon that looks like 2 pieces of paper on top of each other. They can look at the exact backtest that you're asking about, and they'll be able to give you more detailed explanation. OG is entertaining. I became a member a couple of weeks ago. Welcome. I made money in my first trade with a PFE trigger on the Today tab.
Oh yeah.
Congratulations.
Pre-earnings 1 week. Yeah, that was a good one. I did too. One actually worked. It's a miracle.
How many trades per year are generated by 1x2 by 1x2 strategy?
So you can actually count it. We can just look right here. Not a lot. It's not a huge thing. So let's just do 1 year. Here it is. So in the last year, just add these numbers: 4, 2, 4, 5, 3, 4, blah, blah, blah.
Yeah, and all the losses too.
Oh, right. That's true. It does lose.
Sometimes it does. Okay, for a momentum trade, does Ophir have a way to track gamma risk that could be a catalyst for potential continued buying as delta hedging from market makers?
I mean, first of all, you're only going to face gamma risk one way or the other. Well, your gamma risk is going to explode as you get toward expiration. So, yeah, obviously. but you know, there's a lot of there are a lot of theories. That's be nice. Theories about how things move in the option market. Of course, you know, through the stock market, because they're derivatives, not mathematical derivatives, but like derivative, like the English word, like a derivative of this. And some of them are semi-true, and some of them are just made up, like fantasy. A lot of that stuff is fantasy. Some of it isn't fantasy, but if you take Reddit out of it, then it's mostly fantasy. Reddit has actually added some credibility to kind of paranoia that used to exist. And it's funny because now people who are paranoid can say, see, I told you. And it's kind of like, yeah, you kind of can. But yeah, that doesn't, I don't worry about gamma. I mean, if I own too much gamma, I freak out because I don't like owning that many options, but that's a different story.
Let's see. I bought Twilio yesterday because of the buy the dip alert, losing 30% on the trade due to today's market. Should I get out?
What is the stop on buy the dip? I feel like it's actually not. So be careful with Twilio because it has earnings on the 29th, right? So no matter what, you're getting out tomorrow, unless you're taking
Twilio would have
earnings.
been today. If they have earnings on the 29th, that would have closed out yesterday.
Yeah, so that trade should,
wouldn't have
yeah.
opened, yeah.
Yeah, so you shouldn't have taken, per TradeMachine, you shouldn't have taken that trade. When you opened it, it should have said, you know, never trade earnings. Having said that, I can just load this up and just see what the, I'm just curious now what the rules are for the exit. I don't think there is a stop. I don't know why I changed it to it. Oh, so 50% stop. So it looks like you did not hit your stop. So down 30%, no. But earnings are the 29th. So, you know, don't hold their earnings unless you intend to do that. I mean, unless that was on purpose. So I guess you have tomorrow and the 29th if you really want to, because they report after the close on the 29th. So you have 2 more days.
I regret not using the fade the dip strategy during 2020. I have noticed, as you pointed out, that it does have a high number of trade opportunities and with good overall gains, not to mention the high win ratio. Are you aware of conditions where fade the dip doesn't work well?
Yeah,
I've only noticed perhaps the months where the market has a huge sell-off, but it seems to match your loss only 2 months a year.
Yeah, exactly. So being short put spreads is just a beautiful place to be until the market takes a dump, and then it's just terrifying, right? So that's just, everyone who sells put spreads knows it, and if they do it a lot, they're used to it. But that's the danger, like the right? The month is what happens. But you know, having said that, it's a spread, right? It's not naked, so you should know how much you're risking and how much you're willing to risk, and it shouldn't end anything. It could just be one of your bad months for sure, but shouldn't be a catastrophe, you know. So in general, to answer your question, when the market goes down violently and stays down, being short put spreads is going to hurt. At every other time, being short put spreads is going to feel good.
Does the covered call strategy backtest continue to sell the same delta call every month? I guess what I'm asking is, how would you test 20 tickers to see which would be the best at selling covered calls on?
Yeah, so you could do 2. You go to the backtest tab and just look. We have a covered call backtest. Scan right here. So you could just do, okay, dude, pro scan. I don't know, I'll take largest 500 covered calls. So here, hey, Palantir. So you could do that. Alternatively, you could just load one of these guys in there. Let's do the NASDAQ one. Actually, let's do the Dow 30. Load Apple. And I just want to be clear, just so everyone knows this, a covered call is the identical thing to a short naked put, right? That's put call parity. A covered call is a naked short put. They're the same trade. A short put's probably better because it requires 1 commission, just sell puts, as opposed to a covered call, which requires buying stock and selling a call. That doesn't really matter anymore because stock trading is now 0 commission. So, okay, fine. But a covered call is the exact same thing as a naked put, short put. Exact same thing, put call parity, 100%. So yeah, you can, if you want to do that, you can, here it is, and you can just test portfolios, you know, here. Here's what covered calls look like. Okay. I think we have time for one more question.
We only have 12 questions left. It's 6:58. I'm gonna say I'm not gonna take any more questions after 6:58. So cutoffs there. We have 12 questions. Most of them look pretty quick. So let's just go through. Quick one. If you open up the results of a back test and if you click on the chart, the page loads. Is that going to be a feature?
What?
What?
Say that again. If you open a back test, go to the thing. Yep. Then what happens?
And you click on the chart, the page. Oh, yeah. You found the little trick. That is where, so close the details out. Doesn't work yet. Go down, you're doing a portfolio, but if you go down on normal figure, I think, I don't know if they have it for portfolio, the stock chart shows up. And if you click the stock chart, that's where the options chain data will be if we incorporate it.
No, you guys, that doesn't exist. That's
You got it. Who was OG's mentor?
Well, my mentor is James Adrian Kaplan. He's the financial founder of Capital Market Laboratories. He is one of the founding directors of MarketWatch. He was the founder and CEO of CMS, Capital Management Sciences, which was essentially the Bloomberg of fixed income, which he sold to IDC. And he had been fortunate enough for him to be my mentor, and I have had him as my mentor now for 16 years. So I'm a very, very fortunate kid. I'm a kid to him because, he's older. I'm not a kid. But I'm 45, but to him, I'm young, which is also the great thing about having a mentor.
Position sizing can be a tricky topic, especially when using multiple strategies for an option portfolio. Do you use an equal dollar weight position size for all strategies, or do you put more weight based on other criteria of the strategy's results or other criteria?
If I'm doing TradeMachine tests, I'm looking for about the same dollar amount. Yeah. Into my speculations, that gets, different. So my speculation on Vizio is very small compared to my speculation on Jumia, which is very large. Not very large, just larger. That was stupid. Sorry.
How do you save or set default color layout mode, i.e. light dark? Okay, so this used to work. When you click it over to dark mode, it's supposed to stay in dark mode for your entire session. Now, if you open a link, for some reason, it opens the link in light mode. This is on our bug list. Our development team's been made aware of it. Unfortunately, I haven't gotten an ETA on when it's going to be fixed, but we are aware of it. So I know it's kind of a annoying little bug to have. It will be fixed. When choosing a trade, what win-loss ratio do you typically look for?
I don't care that much about win rates. I care more about average return. I mean, having said that, I try not to take trades with a less than 50% win rate, but I'll take a trade with a 50% win rate that has a huge average return as compared to something that has an 80% win rate and has a small average return. So, that's what it's more about. But just to answer your question, if it's below 50% win rate, I'll probably just pass. But I'm willing to take, I have a lot of trades on, so I'm willing to take some losses for the larger wins. That's my version of the world. So it doesn't have to be your version of it.
I tried to do a back test. Oh, sorry. Can we go over how the Bollinger bandwidth indicator works? I tried to do a back test when Apple and Tesla had very small Bollinger bandwidth. Oh, how it's calculated? I think.
So we have two settings for Bollinger. One is, I'll leave this one. Okay, thanks. So, okay, thank you. Oh my God. Okay, cancel. Never trade earnings. Oh, because there's no ticket. Okay. Now we go to technical open, Bollinger bandwidth percent. I don't really know how this guy works. I know how the other guy works. I don't use the Bollinger bandwidth percent. I suppose I should. I use this one, the breakout, and you can set the width right here, number of standard deviations. Larger Bollinger bands means the stock a price gets outside of that band less frequently. Smaller means it happens more frequently. So for example, I'll just show you. This is the 2 standard deviation one. Get long a call when that happens over the last however long I'm doing this. Let's just shut this down for a sec. Over 2 years. When the stock goes above, crosses up through. Yeah. Okay. So this is a 2 standard deviation one. Oops. And now if I go to a 1 standard deviation one, we'll get many more trades. No, 1 more trade. So that's what I mean. It's the width of this this yellow space. It gets wider if you put larger standard deviations. This will happen less frequently.
Okay. Last question. I just sent you a backtest link in your WhatsApp.
Okay, I gotta open WhatsApp.
Not on this monitor.
Can't promise. Okay. Selling put spreads in the SPY.
Yep. Can you give your thoughts on this?
Okay. So this is a 2-year. Can I just make it 2 years? Just so you know, this ends in April of 2021. I guess it doesn't. Never mind. Okay. So just selling a put spread when the 5-day EMA is above the 10-day EMA. Okay. Stocks above the 150. This probably doesn't even matter. The anchored volume weighted average price is 2 days above the stock. It's a bullish trigger, so a time to get not bearish, essentially. So sell a put spread. It's okay. I don't like, so I would do that to start. Let's just do the middle. I'm just easier. Oh, and they're using super short-term options. They won't actually be 2-day options. It'll probably be weeklies. So you could make this a 7 probably. Yeah. These trades are happening every 3 days. It's pretty frequent actually. Close, open. Yeah. I think it's a little too frequent of a trade. I don't love it. I would do something like that. Yeah, probably uses a little less commissions. I don't know. It's okay. I mean, I like the idea of selling put spreads when you have a bullish trigger. So generally I like the idea, and I like doing an ETF because you're not going to get smashed. I mean, you could get smashed, but you get smashed slowly. I'm okay with it, generally. I like the idea.
Okay, that is the end of the questions. I think it's the first time we've ever cleared a Q&A.
All right, since we went over 3 hours, I can't give a story. So next time I'll give 2 stories. So we have to leave 15 minutes for the next one for me to do 2 trading stories. Okay. All right, everyone. I appreciate you, especially those of you who actually stayed this long. I stayed this long, but I had to stay this long, and you didn't. I wish all of you much success. Good luck come earnings season, because it starts now. So let's do well. Enjoy the rest of your week, guys, and I will see you soon. Bye, guys.